everybody, Uneducated Economist here. So, great to see we have like 16 people in here already. Nice. Thank you so much for joining the live stream so early. I was a little bit late to the live stream. I forgot to leave the link to what I'm about ready to read down in the description. So, I went and grabbed that, put it down in the description so that you have it. It's kind of nasty how the weather is really bad. So, I had to move the Explorer into the barn. We have like 28-degree weather out right now and it's raining. So there's like silver thaw that's about ready to take place. I'm really hoping that the stream doesn't glitch a bunch on you or anything. So anyway, hopefully at least the audio part of it. So anyway, before I get started on this and we start breaking this down, talking about the bond buyback program, I just really want to start by saying that I'm going to try to explain this as best I can. This is incredibly detailed stuff and there's a lot to it. Now I know like if you're here like on this private or this membership only live stream, that most likely you're going to get the gist of pretty much everything that we're talking about here. But I'm going to have to kind of explain a couple of things because first before we really break it down, just to make sure that we are on the same page and understanding what it is that they're about ready to talk about. Because again, it's incredibly detailed and they do talk with like a lingo that's kind of all their own, you know. All right. And then like, you know, part of this also is like I think it's important that everybody understands this because it's like it's not information that is going to come right out in the news. Like nobody's going to explain this stuff. Nobody's going to like tell us how it is that we're supposed to understand this information unless we just totally internalize it for ourselves. Once we get it, once we know, then nobody else can really needs to explain it. They can tell us like, you know, the cause and effects from what may happen from it and we can like, you know, give our opinions about that, but they don't have to explain to us what it is that's taken place. We have already done that and internalized it for ourselves. That's what's really important about this whole thing. And also like they've already promised this is coming. This is stuff that we cannot avoid. I mean, it is definitely going to be here. And I don't know anywhere else that you're going to get it. Like if we don't do this for ourselves right here, right now, then we are going to miss it. And I mean, I can't find, I can't take that, right? I mean, I got to make sure that we all get this information out and that we truly understand it. And that's one of the reasons why I'm actually going to make this thing go public too, after we, you know, shortly after. I'm going to give it like a day or two so that, you know, the members at least get a shot at it first. But I think it's that important. Once we get the live stream membership up to, I don't know, a significant amount. I'm not sure what that is. I mean, it's already up to over 200 members, and that's just blowing me away. I mean, thank you so much, by the way, for becoming a member of this channel. It's not only inspired me to like try and bring more value to this, but it's like, I mean, I think that's probably the biggest thing. It's like, it's really starting to like, you know, bring me like, you know, I don't know, more energy, I guess. Okay. Anyway, let's break down some stuff first, and then we'll get into this, into the bond buyback program. Let's talk a little bit about the bond itself. For like a lot of people out there, they may not understand what a bond really is. And when we think about like what a bond really is, a bond is just a contract. It's a loan, right? That you promise to, you know, pay somebody back. Same thing, going to pay an interest rate some point in the future. Generally, it has a date. Well, a bond's very much the same way. The only difference with it is that it's a contract that can be sold to other people. And so this gets really difficult to wrap your head around if you don't understand it. But there's like a few components to a bond that people will talk about. Price, right? Maturity, like how long it's going to go for, and then yield. Right. So between these three things, there is a lot that gets said, right? And a lot of times they will use different language in order to describe these different aspects of a bond. But just to really simply explain it, we're just going to kind of talk about like a 10-year bond, right? So if you can imagine a contract for 10 years, right? Pays 10% interest every year. So the way that bond would look is that it would be a face value, let's say $100. So in 10 years, this bond will pay $100. Then down at the bottom, they'll have what is referred to as a coupon. right? Those coupons are the interest payments that that bond pays. So when an investor buys that bond, right, and they get a hold of it, those coupons is what the interest rates that they're looking for as a return. That's the investor, right? So you put a little bit of money forward and then you get an interest payment off it. That's the coupons, right? So you got a coupon rate, the interest rate, you got the face value of the bond, right? Then you got the price of the bond, how much somebody is willing to pay for it. Now, these are all, like I said, three different things. So that $100 bond, let's just say, for example, somebody pays $100 for it, right? So an investor pays $100 for that bond. In 10 years, that'll pay $100, the face value of the bond. And then over the course of the next 10 years, once a year, the investor will be able to tear off one of those coupons, go in, get a 10% return of the face value, $10. The investor gets $100 over the course of 10 years, plus the return, the face value of the bond, right? Gets their money back. So not only did they get $100, but they get their money back from the face value of the bond. Okay. So now this is where a lot of people begin to get confused because the yield can change on this bond. Now the yield is what the investor is going to get after the purchase of the bond. So even though the first investor, if some of you are wondering what's going on here, this is a light underneath my heated coat because it's like 28 degrees out. So I'm wearing a heated jacket right now. So you might see like the reflection coming out from underneath that. Anyway, so the investor is paid $100. They get a 10% return because they paid $100 for the face value. They get a 10% yield. The next investor who comes in and purchases that bond from them, even if it's the very next day before any of the coupons have paid off, right, decides that they're going to pay a higher price for that bond. They'll pay more than $100 for it. They're still going to get a 10% return, right? But the yield, right, what they will get after the maturity of the entire bond will be less because of the higher price that they had paid. So even though it's going to pay $100 face value and 10% interest rates with all the coupons, that doesn't change about it. What does change is the end result of what the investor will have received after paying a higher price for that bond. So the bond price will fluctuate. When it goes up, the yield goes down. This is very critical to understand because there's a lot of points that get made talking about the price fluctuations within this thing. So once you kind of understand that part of it, then it really starts making a lot more sense when they talk about, like, you know, the bonds rising today, and then yet you're thinking, well, no, wait a minute, I hear about bond yields going down. What do they mean rising? Well, they're talking about prices as opposed to yields. So a lot of times when you hear one person saying that they're going down and another person saying that they're going up, one might be talking about the price and the other one might be talking about the yield. Right. And so since these things work inversely, they're both saying the exact same thing. They're talking about the same thing. It's just one of them's looking at the interest rates and the other one's looking at the price of the bond. Right. So, and this is why it's so confusing. Okay. So if you can kind of wrap your head around that part, and that wasn't too confusing, which I'm sure it isn't for most of you out there. And thank you all 21 of you for joining this live stream. Please sure and hit the like button too when you come into the live stream. Once this thing goes public, once more people see that this live stream was liked, then the algorithm will start sending it around for more people to join in. And if you are joining in from the public viewing of this after this thing has been posted from the live stream, consider joining the channel because of the quality of the content that is only coming from here. Thank you. And not to brag myself up, but I don't know too many people who are putting out information quite like I am for the working class person to understand in a level that we can actually use it. But here we are, we're doing it today. And so I really appreciate you, not only viewing the channel, but then joining the channel afterwards, after viewing it as well. Okay, so one more aspect to talk about before we get started, and that is on the run, off the run. Right now, this is pretty easy to understand. If you can imagine like bonds having a premium, right? So even though it's a 10-year bond, right? We'll just assume, right? We're talking about a 10-year bond, and there's another one that was issued out earlier, like maybe 2 years ago or something like that. When the investor buys either one of those bonds, it doesn't really matter because the yield is going to be the same to them, whether they're buying a brand new bond or an older bond, right? Except that the brand new ones that are being issued carry a little bit of a premium to them, right? So you can imagine anything brand new would be nicer than anything that's been already in existence. It doesn't really make sense necessarily from an investor's point of view, looking at it saying, well, the yield is the same. That doesn't really change. The maturity on the bond would if you're necessarily like buying a bond directly from an investor, but that's not really the way it works now. It's all digital. So really nobody looks at like, whether or not they're buying a bond that's going to, a 10-year bond that's going to mature in 6 years or something like that. It doesn't, that part is really inconsequential since it's all digital and done through the treasury direct accounts anyway. So it's just like you just look at what yield you want, whatever maturity you want, excuse me, and you don't necessarily look at a individual bond on how long it's going to take before it matures. However, if you're one of the primary dealers, you're putting together packages that you're going to sell in like maybe ETFs or into retirement funds or something, that might be something that you would probably consider, and they do. Right, so you got on the run, off the run. The ones that are on the run are the ones that are the newest issued bonds, right? And this is important to understand because, like I said, they talk about it in detail into this thing, and it's important to understand this. So this on the run, right? So these are like the newest issued ones. If you can imagine, like 10-year treasuries get issued, they go out there, they go for sale out in the auctions, they're out there in existence, and then another issuance of 10-year treasuries come in. The ones that were already out there become off the run, and the newest ones become on the run, and they carry the premium, right? So that these big time, money men who put together all these fancy packages and need like the best ones, they will pay a higher price for those, right? They will pay a premium for it. So they carry a little bit extra price for them. Okay. Now that we understand that point, very critical, right? Again, if you are watching this once it goes public, then and you didn't get any of that, you got to go back and you got to listen to that again, and you got to really internalize that and understand it because the rest of this is going to get really confusing. Okay, let's read some of these comments real quick, and then I'll bust into this. All right, thank you so much for joining in, man. This is so exciting. I can't wait to get into this. This is good stuff. All right, looking forward to this. Yes, thank you so much. All right, thanks, Simon. What's up? Looking forward to this. Been listening to your vids since the late in 2019. Wow, from the early days, right on. When I was driving to my job at Embraer Aircraft Maintenance Service. I love how we take the Fed as it is. Oh, by the way, wanted to tell you, I'm wearing my End the Fed hat too. Let me switch that around for you all. All right, or scratch the late... And thank you, by the way, Ordinary, is that what it says? Ordinary Bitcoin? Really appreciate the long-time viewership, man. That's very cool of you, and for becoming and joining the channel, becoming a member. Or scratch the late 2018s. Have learned so much by tuning in, and thank you for what you do. Thank you, guys. Hi there. It's hot and humid here. Oh, man, it is not. It is, like, very cold, and... my poor birds, I got to run water out to them every few hours because their water is freezing over. 82 degrees here in Miami. No, 28 degrees here in Astoria. So I have looked into the Treasury General Account balance. It began growing in October 1st of 21. Interesting. Before that, it was referred to as Federal Reserve account. Wonder why that was. I don't know. That might be interesting to find out. I never really thought about it. Hi everyone. It's great idea. Glad to be here. The membership is better than worth it. Yeah. Well, thank you. And I mean, like I said, guys, it's kind of given me an inspiration, like, to try and dive deeper, to get more into this stuff, to explain things on a deeper level, try to bring more value to it. Like, all of a sudden, like, I know for a lot of people, it might just be $1, but to me, it's like, it's everything. It's just like, all of a sudden, like, it means so much more to me than just like maybe just $1 to you, but it means everything to me. It means that I have to step up and really start doing this on a different level, right? Because if I'm providing, or if I'm gonna try and ask for $1, then I got to provide something. I got to provide something that's worth it, right? And even like I said, even though it's $1 to you, it means everything to me. So it means that I have to put forth everything, So let's see here. The membership is worth it better. Thank you, Brody. I appreciate that. A new member here. Well, thank you, Ashi. Ashi? How do you say your name? All right. I've been following you for a while and glad I support you in some way because I get a lot of value from your channel. Thank you. I thank you too. Good morning, dishes. Hey, good morning, dishes. Good morning to you. All right. I'm curious to know why bonds are so important. It's because that's how we remove money from the system right now. Um, well, why are bonds important? I think that's kind of a good question to ask. Bonds are important on a lot of different levels. For one, it's a way that I mean, you got to think like bonds is really where financing comes from. So anybody who is ever going to borrow money is essentially bonding, right? I mean, it was just like, hey, I promise to pay you in a future date this much at a higher interest rate. That's a bond, right? I mean, it's a contract. And what's really important about it is that, everybody be able to say, take their ideas that normally would not be able to progress forward without the funding that they need in order to make it happen, right? Without finance, right? These ideas may never grow, or it may take longer to happen or to expand. However, there is room for incredible corruption to take place within this system. So bonds are a necessary item, in my opinion, in order to advance the ideas that people have, right? But there's also room for a lot of damage that can take place within this if we are not careful within our conduct, the way that we conduct ourselves. So I mean, just to explain it simply, and then you can start getting into all the little details about how, like, bonds are used as, collateral and all that other stuff. So, but just simply explain, I think a bond is incredibly necessary. All right. Are we about ready to bust into this thing? We gotten through the comments here. New sub here. I'm UK based. It'd be good to understand the possible implications for the rest of the world. Okay. We'll get into that here in just a minute because I think this there's a lot of questions that we can really kind of answer, or maybe answer through this, or after we start conversing about it. First time on the member channel. -30 degree chill here in Minnesota. Yeah, good day to catch up on finance with UE community. All right, how could an university Oh, university. Sorry, guys. I cannot see anymore. I was like, these glasses are make it hard. Okay, how could an uninverted yield curve in the second half of 2024 fit into possible liquidity crisis? Okay. Um, Again, I think this is probably going to have a lot of answers to these questions when we kind of get through some of this. In fact, I believe that they actually address the yield curve within this. And again, this is going to get really complicated. And I hope to explain it as best I can, and really in a way that I think that, once we'll internalize it and then really be able to have a conversation about it. Okay. So here we go. Let's do it. All right. And I'm just gonna go through this word for word, and then kind of stop and maybe look at some of the comments and kind of talk about it as we go. So here we go. Good afternoon, and thanks for having me here today. The topic of today's forum, the resilience of the Treasury market, is a topic that we at the Treasury Department care deeply about and accordingly spend a great deal of time focused on. And the title of today's forum, The Path to Resilient Treasury Market, seems exactly right to me. The use of the word path reminds me of the efforts undertaken over most of the past decade. Resilient treasury markets are not a statistic endpoint. They are a journey towards a shared goal and a responsibility of the Treasury, the board official sector, and the market participants. Over the last few years, Treasuries and our colleagues in the Interagency Working Group on Treasury Market Surveillance, or the IAWG, have made significant progress in developing policies that would help make the Treasury market more resilient. But there is still much work to be done. And as the structure of the market evolves, our policy will need to evolve as well. Venues like today's forum are important opportunities for the official sector to and official sector and market participants to discuss progress and share insight on the best path forward. While the IAWG members continue to consider a wide range of policies to help make the Treasury markets more resilient, my remarks today will focus on one, buybacks. After careful consideration, we decided it was prudent to move forward and announced our intentions at the May refunding to implement a regular buyback program next year. Now, this was September 21st, 2023. So again, this was quite a few months ago, whatever. Okay, next year. Okay, we believe buybacks can play an important role in helping to make the Treasury market more liquid and resilient by providing liquidity support. The buyback program will also help Treasury to better achieve our debt management objectives. Before delving into our upcoming plans, I will first briefly discuss Treasury's recent history with buybacks. The last time Treasury conducted a regular buyback program was in early 2000s, ending in April of 2002. To understand why these buybacks were conducted, it's important to review what was happening with Treasury auction sizes leading up to those purchases. Due to shrinking budget deficits and eventual surpluses in the 90s, Treasury significantly reduced offering size of the 2-year and 3-year notes between 1996 and 1998. Okay, so remember what was going on there, right? This is when the deficits were solved and all this other stuff. Okay, so the Treasury wasn't going into debt as much, and they weren't issuing out as much 2-year, what did you say? Due to the shrinking budget deficits and eventual surpluses in the 1990s, the Treasury significantly reduced offering sizes of the 2-year and 3-year notes between 1996 and 1998. As the outstanding sizes of these issues continued to shrink, on-the-run liquidity was hindered. Remember, on-the-run liquidity is the newest ones. It diminished. This led to concerns of lower auction demand and therefore higher financing costs for the Treasury. So all of a sudden, the people who would typically be there were like, hey, we're not really interested, right? Because you don't have the primo stuff, right? And there's less of us to get into it or whatever. All of a sudden, the demand for it was not there, right? This led to concerns of lower auction demand and therefore higher financing costs for the Treasury. Market observers at the time cautioned that Treasury securities were at risk of losing their benchmark status because the auction sizes were becoming too small, right? This is interesting to think about, right? Because these things there wasn't as many of them, right? And all of a sudden they're like, man, we got to have some good stuff here, man. We need product to turn around and sell again, and you guys just aren't here providing it for us. That's essentially that's kind of what I get out of it anyway when I hear it, right? Because these all of a sudden they're like saying, it was just like, man, this significantly reduced the offering sizes of the 2-year and 3-year notes between 1996 and 1998. As the outstanding sizes of these issues continued to shrink, the on-the-run liquidity was hindered. That means all the people they're willing to buy and sell, all of a sudden there wasn't as many people there because they were like, hey man, if you're not going to do it, then we're not going to do it, right? Okay, and let's see here. Where did I lose? This led to the concerns of lower auction demand and therefore higher financing costs for the Treasury. Market observers at the time cautioned that the Treasury securities were at risk of losing their benchmark status because the auction sizes were becoming too small. To delay shrinking new issue sizes further, in 1998, the Treasury discontinued 3-year offering and changed the 5-year offering from monthly to quarterly. Another consequence of these, so I was trying to kind of figure, okay, the Treasury discontinued the 3-year offering and changed the 5-year offering from monthly to quarterly. So I guess maybe by removing the 3-year and then changing the 5-year from a monthly payout to a quarterly, it made it less attractive. So that would bring more liquidity to the lesser. Huh. I don't, maybe I'm just confused by that one. Anyway, I mean, that's kind of what I guess I get out of it. Another consequence of these smaller, short, and intermediate term offerings, right? Another consequence of small, well, maybe they explain. Another consequence of this smaller, short, and intermediate term offerings, however, was unintended increase in the average maturity of the debt outstanding. Oh, right. So by screwing around with the short term, it had an unintended increase in the average of the maturity. So more people started pouring into the maturity of the debt on the longer term, right? So this was the problem. Okay, I get it. So by removing the short term, people started getting into the long term, and that started creating issues on the long term of it. Okay, the Treasury discontinued the 3-year offering and changed the 5-year offering from monthly to quarterly. Another consequence of these smaller short and intermediate terms offerings, however, was an unintended increase in the average maturity of the debt outstanding as long-term debt remained outstanding. People were still looking for that because it was available, right? It was outstanding debt. At the time, this was considered potentially costly for the Treasury based on an assumption that the yield curve is typically positively sloped. Okay, so that makes sense. So as people started moving into the longer term stuff, it started pulling down the yield curve on the long end of it. And this is what their concern was based on the assumption that the yield curve would typically be positively sloped. All right, so this stuff, see, right? This stuff isn't exactly easy, but I think we can break it down so we understand it. All right, since the budget surpluses were expected to persist into foreseeable future, at the end of the 1990s, the Treasury began exploring options to address concerns regarding shrinking auction sizes, including using buybacks to maintain larger new issue sizes. After careful consideration of a range of options, including recommendations from the Treasury Borrowing Advisory Committee, or TBAC, the Treasury adopted the final rule on buybacks in January of 2000. At the time of adoption, then Treasury Secretary Summers noted several advantages of buybacks, including to enhance liquidity of benchmark securities, right? So as those benchmark securities were diminishing and the people were getting out of them, they were like, no, we're going to be there to make sure that these things stay liquid, right? Because that's very important. Like if the buyers and sellers aren't there, then it can get very, that's probably one of the reasons that it would start causing the interest rates to rise on the short end. So they're going to enhance the liquidity part of it. To prevent, this is number 2, to prevent what would otherwise be potential and costly and unjustified increases in the average maturity of our debt as people start moving into that. More effective, and then, excuse me, and then 3, the more effective use of cash. So again, this was during a time of them having solving the budget deficit problems, right, and having a surplus. Between March of 2000 and April of 2002, the Treasury conducted 45 buyback operations. Buyback, excuse me, guys, buyback a total of $67.5 billion of outstanding debt. The first 42 operations were intended to address concerns related to shrinking auction sizes. Right? And so these guys were going to come in and start buying stuff, being there, buying back their own debt in order to provide the liquidity because there was less people there, right? So these were the 42 operations were intended to address concerns related to the shrinking auction sizes. However, a budget surplus disappeared, and in April of 2002, the last 3 buyback operations were aimed at lowering high seasonal cash balances. While the Treasury has conducted limited small value buybacks each year for most of the past decade to test operational capabilities and has always considered them as part of our debt management toolkit, it has been a little over 20 years since We last conducted buybacks in a meaningful size. So why the change? Why reintroduce buybacks now? So I think that's also something very interesting to think about, is that the buyback program was something that they had always done, right? But they had always done it on a much smaller, limited scale. And so it wasn't like it's significant. And then even if you go and look like other nations do it, and in fact, I think he goes into talking about that here in just a second. So it's not like, the bond buyback program is something that is this like brand new concept or whatever. Like I said, they'd done it back in the early 2000s, late 1990s into early 2000s. They plan on doing it again, and other nations do this as well for management, placement, like debt management positioning and stuff like that. So it's not like unheard of, but it is once it becomes significant, right? And then, like, I don't know what meaningful size is, but I guess they plan on going to a meaningful position here soon. All right. Are you guys enjoying this? Is this fun? I mean, you guys having a good time here? Gosh, look at all these comments. Okay, I just want to make sure that we're all still having a good time when we're listening in. All right. Okay. Where were we? Okay, first, a buyback program in the treasury market would not be unique. Many sovereign debt management offices around the world use them to achieve various objectives. A 2022 OECD survey of nearly 40 sovereign DMOs, debt management offices, I'm assuming that's what that means, indicated that a majority of the respondents conducted buybacks or switches, that is, exchanges of one security for another. Additionally, there have been a handful of studies suggesting there are both liquidity and cash management benefits of conducting buybacks, even when there are budget deficits. Finally, we have received significant amount of feedback over the years, including from the TBAC, the primary dealers, and other market participants supportive of regular buyback program. So yeah, I can imagine if you're a primary dealer, you definitely want to have the liquidity there, because if you're going to be like one of the people who are going to deal in this all the time, then you would definitely want to make sure that the market is going to stay liquid, right? Okay. Let's see here. It is cold out here, and I'm a little like snotty from it. Sorry, I don't mean to share that with you, but anyhow, we have two objectives for our upcoming buyback program: liquidity support and cash management. Before expanding on these, let me be clear on what these programs is intended for. Or I'm sorry, let me be clear on what this program is not intended for. There we go. First, we do not intend to conduct tactical or ad hoc operations. Instead, buybacks will be conducted in a regular and predictable manner. Second, we do not intend to use buybacks to change the maturity profile of our debt outstanding. Our issuance strategy remains our primary tool for adjusting the maturity profile. Our issuance strategy. So like whatever they're issuing is what they are going to use to try and manage where it is that their profile should be, right? And like how much debt they should have on the long term and short term. All right. If desired, and we plan to limit the size of our buyback operations and conduct operations across the curve. And third, our issuance strategy remains our primary tool for adjusting the maturity of the profile, if desired. And we plan to limit the size of our buyback operations and conduct operations across the curve. And third, buybacks are not intended to address acute periods of market stress. I'm going to disagree. All right. But that's just my opinion. I'll come back to this in a moment. Here we go. And that's what he says there. I'll come back to this in a moment. All right. As I noted, the first objective for our buyback program is liquidity support. We believe buybacks can help improve the liquidity of the treasury market by providing a regular opportunity for market participants to sell back to the treasury off-the-run securities across the yield curve. This should improve the willingness of investors and intermediaries to trade and provide liquidity in these securities, all else equal, knowing there is a potential outlet to sell some of their off the run holdings. What does that sound like? Right? What do we talk about all the time? This should improve the willingness of investors and intermediaries to trade and provide liquidity in these securities. All else equal, knowing, if they know, right, there is potential outlet to sell some of their off the run holdings. So if they know that they have a place that they can go with this stuff, then what does that mean? Right? It's a credible threat. That's like one of these things. Like if they can put out there this idea that they are going to do it and be willing to do it and actually participate in it, then they really don't even have to at some point because the market's really going to step in and do it for them. All right. So let me kind of go over that one again because I think that was really important to understand. This is like kind of the point of it, right? I mean, this is like, it's just to make sure that people know that they're like, once they start this, this is going to create like they can't go out there and say, hey, we're going to put this credible threat down on you so you'll go out there and buy these things, right? They can't say it like that, right? But they can like conduct themselves in a way that does it, right? That creates this credible threat. As I noticed, the first objective of our buyback program is liquidity support. We believe buybacks can help improve the liquidity of the treasury market by providing a regular opportunity for the market participants to sell back to the treasury off the run securities across the yield curve. This should improve the willingness of investors and intermediaries to trade and provide liquidity in these securities, all else equal, knowing there is a potential outlet. Potential, not saying that's that's the reason. It's a potential reason. A potential. Wow, I just lost my place. Oh, that sucks. Securities off the run. These operations can securities and then brokers. Geez, I already lost it. Providing liquidities in these securities, all else being knowing there is a potential outlet to sell some of these off the run holdings. These operations can also make intermediation capacity more readily available by Treasury purchasing hard to move securities that are in broker dealer inventories and use up their intermediation space. So then they could, like that to me, that's like cleaning up the slop, right? The operations can also make intermediation capacity. So they can free up capacity in these primary dealers more readily available, right? That space more readily available if the Treasury is purchasing hard to move securities, pulling those ones that people aren't buying, they pull those back out, buy those things off of them that are in broker dealer inventories and use up their intermediation space. That would give them room to buy the ones that they truly want. All right. With more intermediation capacity readily available, the Treasury market should see improved functioning in normal times and have enhanced ability to absorb larger flows. All right. I think we're getting this, guys. You having fun? I mean, I know I'm kind of tripping through some of this stuff, but I'm trying to figure it out the same as everybody else, you know? Right? All right. Why we. All right, this is so funny. All right. Why we believe it is important that we retain some flexibility in providing incremental liquidity support to certain sectors of the Treasury market. It is important we make it clear at the outset that these buybacks are not intended to eliminate periods of acute market stress. I really doubt that. I think it is about market stress. Unlike I mean, the market stress is all right. It's like they're planning it at the same time. It's like there's like going to be market stress coming, right? So, anyway, unlike the Federal Reserve System, which can finance purchases of securities by creating reserves, each dollar of buybacks needs to be financed with dollars of Treasury issuance, all else equal. All right, so that's something important to remember. Like, you know, because I said before, like this is very similar to what quantitative easing would be like coming from the Federal Reserve. But this is the Treasury. Like this doesn't have anything to do with the Federal Reserve, right? I mean, it does with the primary dealers and it does with the New York Fed because they're the ones who actually conduct and facilitate the trades of this stuff. But it doesn't necessarily have to do with the operations of the Federal Reserve. This is the Treasury acting on its own here, you know? Okay. Where was I? Okay, this limits our ability to rapidly increase the size of the buybacks to a level potentially necessary to alleviate market stress without resulting in significant costs for the taxpayer. So they're saying like this is not something that they can actually do, like the Federal Reserve could possibly do, because the level of it is just like it's like insignificant to what the Fed could do with their stuff, right? So they say like there to this limits their ability to rapidly increase the size of the buybacks to a level potentially necessary to alleviate market stress without resulting in significant cost to the taxpayer. As a corresponding rap as a corresponding rapid rise in treasury issuance could materially increase our financing costs during these periods. So, the second objective of our buyback program is cash management. We believe buybacks can improve our cash management by reducing the volatility in our cash balance and a bill issuance in two ways. We believe buybacks can improve our cash management by reducing the volatility in our cash balance. So reduce the volatility. So I guess the volatility is something that we're kind of experiencing right now. If you go and look at the Treasury General account, it's like bang, 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 it's all over the place. And bill issuance in two ways. First, during periods of high tax receipts, our cash balance typically rises meaningfully, and we try to offset some of this rise by making significant reductions in bill issuance. So that makes sense. If you take in more cash, then why would you have to borrow more? When they say bill issuance, bills are short-term bonds, right? So bills and notes, those are short-term, bonds are longer term. And so that's kind of another important thing because you might have, like, the lingo that they use, right? So, where was I? And I already lost it. Okay. This volatility can be costly to taxpayers, balance between the supply and demand by potentially hindering the smooth functioning. Or did I already go past that part? Okay, I'm sorry. There we go. Meaningful way. God, I'm terrible at this section. All right. It's already hard enough to read. So, okay, here we go. First, during periods of high tax receipts, our cash balance typically rises meaningfully, and we try to offset some of this rise by making significant reductions in bill issuance. This volatility potentially hindering the smooth functioning of the bill market. So the short term, right? The short term bonds, those bills. Conducting buybacks during these periods could help reduce some of this volatility. Second, we plan to focus cash management buybacks on purchasing securities with maturity dates around periods of large outflows. Second, we plan to focus cash management buybacks on purchasing securities with maturity dates around periods of large outflows. So if they start finding where the market is getting out of a particular maturity on the curve, on the yield curve, on the maturity curve there, whatever, they're going to jump into that spot and provide the liquidity for that. That's what I'm getting out of that, which also reduce this volatility. All right. So these buybacks could mitigate the need to raise extra cash through bill issuance to prepare for such periods. Hmm. All right. So, kind of interesting to think there as a little add-on. These buybacks could mitigate the need to raise cash through bill issuance to prepare for such periods. I don't know. To me, it seems like they already did that. All right. Operationally, both liquidity support and cash management buybacks will be executed by our fiscal agents, the Federal Reserve Bank of New York, via the same trading platform that they have used for the past 17 years to conduct their purchases of Treasury securities. While the goals of our buyback program are quite different from the goals of the Federal Reserve System prior to the Treasury Security Purchasing Program, the quantitative easing, right? But they're comparing it right now. While the goals of our buyback program are quite different from the goals of the Federal Reserve System prior to the Treasury Security Purchase Program, the actual operation should be familiar to market participants because many of the design parameters are similar. You guys get that? Like everybody's talking about the Federal Reserve firing back up. Listen to that, right? However, an important, or wait a minute, this, gosh darn it. All right. The Treasury security purchases, the actual operation should be familiar to the market participants, market participants, right? The credible threat, I guess, right? The perception should be familiar to market participants because many of the design's parameters are similar. However, an important difference is that we intend to be more precise, or I'm sorry, more price sensitive in selecting the buyback offers to accept. Because we are not targeting a fixed quantity to purchase, so like the Federal Reserve was just in quantitative easing, just buying massive amounts, these guys are going to be more selective in it, which didn't they say they weren't going to be? However, an important difference is that we intend to be more price sensitive in selecting the buyback offers to accept. Okay, because we are not targeting a fixed quantity to purchase, we believe it is important to only buy back securities that help us meet our objectives and to only execute at attractive prices. So I'm guessing what they said that the Federal are they accusing the Federal Reserve of being price gouged? Is it I Am I? See, I always look at things kind of weird. It's just like, what did he just say? All right. Okay, let me say that again. Okay. Because we are not fixed. Sorry. However, an important difference is that we intend to be more price sensitive in selecting the buyback offers to accept because we are not targeting a fixed quantity to purchase. We believe it is important to only buy back securities that help us meet our objectives and only execute at attractive prices. And so, meaning that they have no intentions on buying unattractive prices. As a result, the amount we buy during any given operation might be materially lower than the maximum amount announced. The amount that we buy will be closely tied to the quality of the offers we receive. That's what it kind of sounds like to me. Is like, now we're not going to do what the Federal Reserve did and they just bought whatever and paid any price for it. We're not going to be like that. So like they're basically saying that the Federal Reserve was like price gouged with these treasuries. That's what I got out of that. Right? However, an important difference. Price sensitive in selecting and the offers we accept because we are not targeted fixing into the purchase. We believe it is important only to buy securities that help us meet our objectives and only execute at attractive prices. Yeah, that's what I got out of it. Okay. To to measure to measure the success of the buyback program, we plan to utilize both quantitative and qualitative measures. There is no single measure that we plan to rely on. Oh, that's convenient. For liquidity support, buybacks, while we hope to see more improvement across liquidity metrics over time, we recognize there are many other factors that may affect liquidity at any given moment, such as market volatility. But you're not there for that, right? Okay. For liquidity support buybacks, while we hope to see some improvement across liquidity metrics over time, we recognize there are many other factors that may affect liquidity at any given time or any given moment, such as market volatility, which you are not supposed to be there to deal with, right? Market stresses. It just seems like right there, you're there to support it. I don't know if that's what you're necessarily saying. You like how I read out loud? Like how I think out loud as I read this stuff? Okay, for liquidity support buybacks, while we hope to see some improvement across liquidity metrics over time, we recognize there are many other factors that may affect liquidity at any given moment, such as market volatility. So I don't know. Are you just not going to be there during that time and just say, "Oh no, we're doing a buyback program, but there's market volatility, so we can't do it now." I mean, of course you're going to be there. All right. It has also been a while since we last conducted regular buyback operations. As such, Our understanding of the effects of buybacks will improve as we conduct more operations and have additional data for analysis. We are confident that the operational design parameters we have communicated thus far are a good starting point. Like, just by simply talking about it, right? I mean, once people realize that you had intended to do this, and they're going to start moving. But over time, we may need to make some adjustments to better achieve our objectives. Turning to one last question on buybacks, how should they be financed? Good question. We plan to treat the increase in our borrowing needs due to buybacks the same way that we treat other outlays. Moreover, we think it would be imprudent to try to replace the interest rate risk that buybacks remove from certain maturity sectors in the market by precisely offsetting them with issuance an equivalent amount of on-the-run treasury securities in the same maturity sector. Attempts to do so would unnecessarily limit the flexibility of our issuance strategy and run counter to regular and predictable issuance. When evaluating how buyback affects our issuance plans, we will continue to look at our borrowing needs in totality in short, intermediate, and long term, and make issuance adjustments based on what we believe is the appropriate mix of coupons and bill issuance. Unexpected short-term changes in borrowing needs will still largely be addressed with changes in bill issuance. We plan to treat the increase in our borrowing needs due to bond buybacks the same way that we treat other outlays. Moreover, we think that it would be imprudent. So it is like as okay. We think it would be imprudent to try to replace interest rate risk that buybacks remove from certain maturity sectors, so certain parts of the maturity curve there, in the market by precisely offsetting them with issuance of an equivalent amount of on-the-run treasury securities in the same maturity sector. They're saying just replacing it is not a good idea. Attempts to do so would unnecessarily limit the flexibility of our issuance, because they would just basically, issuance and run counter to regular and predictable issuance. So if they're making that statement right, so if it starts to move and they start moving with it, then it wouldn't be predictable. Okay, I guess that makes sense. When evaluating how buybacks affect our issuance plans, we will continue to look at our borrowing needs in totality in short and intermediate and long terms to make issuance adjustments based on what we believe is the appropriate mix of coupons and bill issuance. Unexpected short-term changes in borrowing needs would still largely be addressed with changes in bill issuance. Before I conclude, I want to close with a few words about recent debt management decisions. Since the suspension of the debt limit in early June, we have substantially increased gross issuance, both to rebuild the Treasury General account from very low levels and to continue to meet the government's ongoing borrowing needs. Nearly all of this increase has been in Treasury bills, where more than $1 trillion of increased supply has been absorbed well. The total supply of bills now exceed $5.2 trillion, which represents just over 20% of the marketable Treasury debt outstanding. Isn't that incredible? Oh my gosh. While bill supply is likely to remain 20% of some time, or 20% for some time, our intentions is to gradually increase coupon issuance to better align with auction sizes with intermediate to long-term borrowing needs. Our intention is to gradually increase coupon issuance to better align auction sizes with intermediate to long-term borrowing needs. As I outlined at the August refunding, we expect further gradual increases in coupon auction sizes will likely be necessary in future quarters. The TBAC has supported this approach, recommending at its August meeting that considering the scale of and uncertainty of projected borrowing needs, the amount of bills as a share of total marketable debt outstanding should deviate from the TBAC's recommended 15 to 20% range for some time. I don't know if I understand what was just said there, guys. I'm going to read that again, and I'm going to see if I can't grasp that, but the bill supply is likely to remain above 20% for some time. Our intentions is to gradually increase coupon issuance to better align auction sizes with intermediate to long-term borrowing needs. Increase coupon issuance to better align with auction sizes and intermediate to long-term borrowing needs. As I outlined at the August refunding, we expect further gradual increases in coupon auction sizes will likely be necessary in the first quarter. The TBAC, is that increasing the coupon to try and make it more attractive? Am I missing something there? Maybe somebody else understands that. Maybe I'm just missing something and I'm just like kind of clueless on that. But I mean, not to like, give in to like, like me not understanding it, but maybe I'm just misunderstanding the words behind it. But I'm guessing like that what they mean, they increase the coupon issuance means that they're going to pay a higher interest rate on some of this stuff to try and make it more attractive. That's kind of what I see out of it, right? While the bill supply is likely to remain above 20% for some time, our intention is to gradually increase coupon issuance to better align auction sizes with intermediate to long-term borrowing needs. As I outlined in the August refunding, we expect that further gradual increases in coupon auctions sizes will likely be necessary in the future quarters. The TBAC has supported this approach, recommending that at its August meeting that considering the scale and uncertainty of the projected borrowing needs, the amount of bills as a share of total marketable debt outstanding should deviate from the TBAC's recommended 15 to 20% range for some time. See, this is confusing stuff. Treasury will continue to follow its long-standing, regular, and predictable approach to issuance and continue to use our quarterly refunding statements to provide updates on future changes to borrowing needs and issuance. Our approach will continue to depend on a variety of factors, including the evolution of the fiscal outlook and the pace and duration of future redemptions from the Federal Reserve SOMA profile. Or the SOMA portfolio. Yeah, it's going to be a while before they get any kind of redemptions from the Federal Reserve. The Federal Reserve typically, okay, so this is something, what they're talking about right there. The Federal Reserve, they are essentially nonprofit. But they have their operations cost and, their whatever the little bit they make and stuff like that. And then they return all the rest of it to the Treasury. So actually, the Federal Reserve is like a bit of a moneymaker for the Treasury itself. However, right now, the Federal Reserve is in debt to the Treasury, and that's what they're talking about is, depending on the future pace and duration of redemptions from the Federal Reserve, but that isn't happening right now. And from what I understand, it doesn't plan on actually returning back to paying the Fed back and making, paying back everything that they owe it and, continuing to make those redemptions back to the Treasury. That doesn't happen until like 2025 or 26 or something like that. Okay. In conclusion, I am hopeful that the upcoming regular buyback program will become an important feature of the Treasury market, improving liquidity, right? Improving the liquidity and helping Treasury meet our debt management objectives. The feedback we have received today from a wide variety of market participants has been tremendously helpful and will continue to be important as we further refine the operational design parameters of the program ahead and offer our planned 2024 launch. Right? Our planned 2024 launch. Enhancing the resilience of the Treasury market remains a top priority of the official sector, and I look forward to the rest of today's discussion on ways to ensure that the treasury market remains the deepest and most liquid market in the world. Thank you. All right. Thank you for letting me stumble through that. I hope I didn't sound too weird and, boring and not jiving or whatever, but that's a lot to get through. There's a lot of stuff to try and process within that. One of them, I think that the one part that really kind of confuses me that I probably should probably better understand is talking about that coupon issuance, like to better align with auction sizes with intermediate to long-term borrowing needs. I mean, I'm not exactly sure if I'm grasping what they're saying there properly, but that's kind of what I'm getting out of it, is that they're going to have to pay a higher interest rates to align with the auction sizes. I don't know. Okay. Was that fun? Let's go and read some comments here. I've been listening for at least 2 years. As a young guy, really thankful to learn economics from the best. I couldn't grasp it before learning from you. Happy to support the channel. A lot of value. Well, thank you, self-education. I really appreciate that. That's like one of the best. That's like the best comment right there. That's what I really like to hear. I want to read all these comments because I want to make sure that everybody, that I read through all of them. So it's probably going to take a while before we get to where this, where we start discussing this, but give me just a minute and we'll go through it here. All-nighter. Oh, hi there. Hello from, what is that? Charger Mopar. I like it. All right, the Charger Mopar, good to see you. Calling 10 on the dice. Same here. We seem to be in a lot of the same grounds. Yes, sir. Great minds. Oh, groups. There we go. Yes, slippery fingers on the keyboard from eating heart attack chicken. Starting from the beginning, catching up 2 times. Thank you, self-education. Glad you're here. We need more women's minds thinking on economics since men and women think differently. Absolutely. Absolutely they do. It's funny. I was talking to my wife about that earlier today. You know what's funny? Like, I'm just going to say this real quick just because we're talking about how they think differently, It's funny. Men think logically, women think emotionally, right? That's just the way they are. Except when it comes to love. When it comes to love, women think incredibly logically and men think incredibly emotionally. It's funny. Moving on. After all, so mad today. Love so mad today. I get it. Okay. PTFBUF game moved to Monday, 420 thanks to New York governor. I'm losing my mind. What do we need to do to prepare for the lack of liquidity, or have I missed the answer? Well, Josh, that's the curious question on it all. All right. So here's the funny thing about it. That it's not going to happen if they tell you about it, right? Just like anything else out there, like, things that really are crisis are things that people didn't really see coming. And now there are obviously there's going to be some people who are going to be able to call it out ahead of time. But if they know about it and they're prepared for it and they have like stuff in plan, right? Like, we don't know the tools and everything that they are going to use. So we can prepare all we want, right, to try and like capitalize on this, and they're going to do something that doesn't end up planning out the way you thought it was. And so this is the problem with it is that that's like putting your expectations out there, right? You're putting your mind out there saying, man, if they do this, then I'm going to profit from it, right? And so how do I capitalize on this thing? And I kind of look at it from a different approach. I know that they are going to be conducting themselves in this way, right? So as people are going to say, oh man, this part of the market is going to end up having some liquidity issues, I'm going to be able to say, well, yeah, but the bond market isn't going to have those liquidity issues because we got the treasury coming in and nobody's talking about that. So as other people are planning and conducting themselves and doing things, which is actually going to impact the market, right? Other things are going to actually play out in a way that they didn't anticipate, right? Because this stuff isn't really being talked about. We have to internalize that, right? Because now you're in a position to do something about it. Now, what do? I don't know, right? I don't know who you are, and I don't know what you're going to do. I know me personally, I'm going to look at that and say, man, I think that that's going to create an issue at some point where people are going to have like an idea that there is going to have liquidity issues out there. And they're going to start dumping out of the market and then realize that they didn't need to do it. Like that could be an outcome from this. I don't know, right? I mean, if it happens, it happens. If it doesn't, well, then we move on. I'm not going to predict that part of things, right? Because I don't know if that's the way that people are going to react. However, if they do, that's a position in which that being in cash, anticipating liquidity crisis that doesn't manifest itself, that everybody is thinking that's going to happen, is a position that you buy in, right? I'm not saying to do that. That's not a suggestion. That's not financial advice, and that's not what I'm saying that you should do. That's just something that has come out of me when I internalize this information. Right? And so you might be in a position in which that you don't want to buy into stocks. You might want to be buying real estate. This is a different thing to think about when you think about real estate. Are people going to be jumping out of real estate because of the same reasons that they're jumping out of stocks? No, of course not. Right? So now you have to think about it and you have to internalize it in a much different fashion. That's the point. Here's something else I'm going to say. There's no video, there's no person, there's no book, there's no secret formula. There's none of that stuff. None of that stuff exists. Right? It just doesn't. And so knowing that, right, that there is no video that you're going to watch that's going to give you the answer, right? That's actually relieving. Okay, knowing that you don't have to be in anxiety going, man, I gotta watch that, I'm gonna miss something if I don't watch it. Don't worry about that. You're not gonna miss anything because there's nothing that they could possibly tell you that is gonna make any difference. Right? If you don't do it for yourself, you have to take this information in. And if you're taking it in like, what do I do? Right? You're not gonna get it. They're not gonna give you that information, right? The information comes from within you. You gotta know what to do. Right? But what you have to do in order to get there is you have to figure out what it is they're doing. I know what the Treasury's up to. Like we went through this speech, or not this speech, but this, this press release. And outside of understanding whether or not the coupon issuance is what I think it is, I think we kind of broke down everything that they plan on doing here. So it's not going to come as a surprise, where it is going to come as a surprise to a lot of people because they just simply don't even know it's happening. All right. Okay. It's manipulation to stimulate the outcome they desire. Cash is great when liquidity is needed. Just come with a holding cost we call inflation. Hi, dishes. Thank you, all-nighter. Think you may have misread. No biggie. Thanks you do a lot for the channel too. Simon's right hand man. Absolutely. All nighter is my right hand man when it comes to this channel. I mean, he's always there, man. Like all nighter's always everywhere, all the time, man. It's like it's awesome. Self-education. What's your gender anymore? Oh, you guys talk. Okay. Yep, it's all good. Great time, man. Right on. All-nighter, spot on. Okay. How would liquidity crisis affect the housing market? Well, I don't think it is necessarily going to affect the housing market because I tell you, the more I think about interest rates affecting the housing market, the more disconnected I become from that idea. I mean, you think about it. The Federal Reserve started raising rates and the mortgage rates immediately shot up. And then they found their spot, like they found their area. And even though there is this kind of thought that there's going to be lower interest rates coming into the future, which there very well could be. I mean, I'm not like trying to say that there's no way the Federal Reserve is going to be lowering interest rates. I just find it very difficult to believe that when the unemployment is as high as it is and it's their ammunition and the inflation rate is on an average and not in target. Like, I mean, all those things just line up for me to think that way. So, shit, or kind of lost. Oh, so the housing market, right. So when it comes to interest rates on the mortgage market, I think that's probably more impactful on what's going to happen to the housing prices and what's going to end up happening there. But it didn't really have the dramatic impact on housing prices like a lot of people thought it was going to, real estate prices. I mean, it's going on for a while now, right? I mean, even I myself got into my house just as interest rates started to rise, right? I got it at 3.25%. So it was 2 years ago, a little over, like, it was 2 years, 2 months that now that I've had my house. And since then, interest rates have continued to rise. So over the last 2 years, I've not only watched my home price in my area, including my own home, dramatically rise in price, estimated value. And of course, it's ZELLE, which can be, taken, given for whatever it's worth. But it's still far above what I paid for it, right? Even though the interest rates are incredibly elevated. So to me, like, this has been a major disconnect that is happening out there. Now, liquidity crisis coming from, say, being able to borrow money. Like, this is another liquidity issue, is that literally, like, nobody's there to loan money. Everybody's looking for money. So they're selling their assets, trying to find money because nobody's willing to lend it to them. So this is also going to be a problem for people who are looking to borrow money. And you think about it, you probably end up paying higher interest rates during this time since there's less money out there to borrow. However, like, from what I understand, like a third of all homes still are going to cash buyers. Even my buddy, who just recently bought a house in Arizona, I think it was Arizona. Anyhow, paid all cash for it. Right? He told me I said, "Dang, man, you just said that you were going to move," and he was just like, "Yeah, well, it doesn't take long when you're paying cash." And I'm like, "Yeah, I guess not." Right? So, I mean, I know people personally who have done it, paying cash for houses. So again, is this going to hit the real estate market? I don't think so. Like, not like you would want it to. If you're looking to pick up a house cheap, you would want it to hit the housing market and, like, just totally smash it, and then you can pick up a real estate cheaply. But I don't think that's going to be the case within this. Even from some of the previous things that just happened just recently, saying that these are the things that would cause a housing market crash didn't manifest themselves in the way that we would think they would. So yeah, I think it's going to be less impactful than what, we would probably, like, if you're looking to buy a house, than what you would want it to be. Yeah, I don't know. Does that make sense? Oh, where are my broken glasses here? Okay. Predictable manner. So the Fed already knows exactly how much they will buy back. This isn't the Fed. This is the Treasury itself. There's two different things. That's, something important to remember. You got the Federal Reserve and you got the Treasury, and these are not the same thing. They're not even remotely close to being the same thing. You can't say, well, they're kind of the government. No, they're not. They're not a government at all. And this is really important to understand, because the Federal Reserve conducts themselves in a way that is separated from the government. Even though people really, 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 really want them to be part of the government, they're not, right? They're a private banking institution, and they have private shareholders. They make they make independent decisions away from the government. There are appointed positions at the Federal Reserve that is given by the presidents, and elected into those positions through Congress and stuff, whatnot. However, the decision making process that goes down is done independently through them, right? Not through government actions or anything else like that. When the government goes and does their government spending and stimulus packages and all that other stuff, the Federal Reserve does generally facilitate that. Like during the pandemic, when they went into all the stimulus packages, the Federal Reserve did go into their monetary quantitative easing, right, which is printing up the money and buying treasuries, buying the stock, buying those debts, all these treasury bills and bonds and all that other stuff. The Federal Reserve was buying that stuff up. Now, if the Federal Reserve was to directly buy those things from the Treasury, if the Federal Reserve was to do that, that would be monetizing the debt. That is against their charter. It's technically illegal. They can't do that. Okay. So what ends up happening is that there's primary dealers out there. So when these treasuries come up for auction, right, the on-the-run treasuries, right, the brand new ones, the primary dealers are the ones who step up and get buy those treasuries from the Treasury during these auctions, right? So once they get a hold of them, right? Then other people, institutions start buying them from them, like, retirement funds or whatever, whoever's going to want to have treasuries, they buy them from those. Now, there is an account called the Treasury Direct account in which that you and me and everybody else can buy treasuries from, in the same manner, but it's not necessarily going through the Treasury itself in the sense that the way that these auctions are being done. Okay. So the auctions are going to the primary dealers. The Federal Reserve then comes in and buys those things from the primary dealers. The Federal Reserve must buy something that has already been purchased, right? Otherwise, it would be monetizing the debt. Now, I know this sounds like, well, what difference does it really make if it goes through the primary dealers or not? It doesn't really, because if you think about it, if the primary dealers know that the Federal Reserve is in quantitative easing and printing up money to buy these treasuries, and you can buy as many as you want, knowing that you can just sell them to the Fed because they're going to do it, right? So it might as well be monetizing the debt in a sense, but it does filter through the primary dealers because direct purchases from the Federal Reserve to the Treasury would be technically illegal. They can't do that. And this is one of the reasons why a central bank digital currency is a little bit difficult, right? Because then the Federal Reserve would have direct access to not only it would have to have direct access to the purchases of the treasuries themselves and to the people. And this is one of the reasons. I mean, I guess they could go through the primary dealers on it still, but then it would I think that would kind of negate the idea of what the point of the central bank digital currency would do. And I think that's probably should be broken down in a different video, because I would like to get some, like, some stuff coming from the Federal Reserve itself, kind of talking about stable coins. And I think that would make a really good video to talk about, because I feel stable coins are going to be more of what ends up being the Federal Reserve's central bank digital currency more than, say, their own central bank digital currency. Anyhow, let's move on. Okay. Okay. Think I'm following dense information, though. Oh man, isn't it? It is really difficult to wrap your head around all this stuff. But I guess basically, if I was to put this all up in a nutshell, what's going to end up happening is, because similarly, right, to the deficits, or the solving of the deficit problem in the late 90s into the early 2000s, when the Treasury all of a sudden had a surplus of cash. Well, it's hard to believe, but if you go and you look at it right now, there's a lot of cash sitting at the Treasury general account. Now, if they ever come into a position in which that they are not issuing out a particular section of issuance on the maturity, right? So here you have all these investors who want to buy these different dated fixed incomes, right? They want to be able to buy, for a particular amount of time and get a fixed amount of interest rate off of it. And these people, if they are not there to provide the liquidity in that particular section, then the Treasury is going to step in and provide that. The reason why they wouldn't be there is because the issuance is falling. If the issuance is falling, they become less of a benchmark attractive spot. They need these things in order to do their business. And if they're not going to, if those issuances coming from the Treasury are not there, then neither will they. They won't be there either, right? And so this is how they're going to be like, okay, so we're going to provide liquidity to these particular sections of the market, in which that will then bring in the idea that the market participants should be there as well. Did I get that right? So, all right. I will sometimes watch several times, stopping and thinking along the way. Dense info for sure, yeah. Aren't they contracting themselves? They said this wouldn't be mitigating market volatility, but they are clearly suggesting that the conditions under which they do this. Yeah, right. I know. That's why I'm like, elaborate means relieve. What did they? Oh, okay. Hold on. Let's go back. Because thank you. Because I don't think I really understood what elaborate. Where was that part in here? Oh well. I have to go back and find it. Oh, gee whiz. It is so cold out here, guys. Okay. Ameliorate. Oh, thank you. Ameliorate. Thanks, Brody. I am like the worst person in the world when it comes to like I just make up words and I just like I don't know. It's surprising that I was able to get this far on YouTube as far as I did because like I like I am not a linguist at all. uh, Contradicting. I meant typo. Okay. All caught up now. Okay, buying large outflows to provide liquidity. Slow thumbs. The credible threat theory makes a lot of sense. Yeah. The Treasury cannot pay for maturing bonds with fresh T-bills or bonds, but assume that the market would rather take interest, yes, zero yielding cash. Does this sound like falling rates? Huh. Interesting. Yeah, let me read that again. If the Treasury cannot pay for maturing bonds with fresh T-bills or bonds, but assumes that the market would rather take interest, yes, zero interest, yes, zero yielding cash. Does this sound like falling rates? I'm loving the T-bill issuance. Similar operations equal financial engineering. America, I'm not sure, but I think rates would be going up and priced down to entice investors out of their desire for cash. I would think so too, but there's also the direction in which that your portfolio grows. So you like, just like anything out there, if you bought a stock, you would want to see the price go up. And that's what a lot of investors are looking at. Not necessarily the return on investment that they're going to get from the yield, but the direction in which that the price is going to go and so that they can sell it. So they're speculating, on it more than they are thinking that they're going to get a return on the investment. I'm not saying that's what's going on, but that does have a tendency to happen, especially on a continual dropping of interest rate environment. Uh, yes, that does sound correct because whales would be using liquidity to purchase other assets, leading to a debt spiral. All-nighter DXY has been on the rise, which technically means dollars purchasing power is growing. If true, this isn't to relieve moments of stress, then this might be a wink nod to banks that they can trade in low interest rate bonds later to incentivize purchases when the treasury is bad off. Like they have a difficult time selling treasuries at low interest rates, especially for long dated. So they want to make sure they have a market for them in the future, therefore. They will signal that you can more or less exchange them when the Treasury allows for it. Probably made a deal with banks a couple of years ago that they would do this, and this is the official statement telling the market their intentions. Sounds like inside trading and would be par for the course, in my opinion, Greg. Thanks for typing all that. Yeah, me too. Thank you for typing that. That was like, I kind of agree with that because why else would they end up doing that? Why would they hold so much on hand unless, they knew that there was going to be a buyer for it in the future? I mean, otherwise they would be caught. I mean, you think about it, like even right now, the trouble that happened with the banking system just when the treasury yields started to rise and their holdings started to deplete, their portfolio started to fall. I mean, what gives the banks confidence to continue on unless they know that this is gonna be part of the future here. All right, thanks, Acer. My understanding is sputtering at the moment. All right, let's see, Greg. So essentially, a bank bailout, as many bank have large numbers of low interest bonds on their books with no way to offload. Yes, exactly. Yep. Okay. The Treasury knows who makes the purchases. They know who needs help and who's done them favors. The buybacks at typical designated to purchase a certain term bond. So which bonds would key to know? Happy New Year, Simon and family. Hey, Happy New Year, Glenn. It is the whole reason why Yellen couldn't refinance the government debt at low interest rates. No one would buy it if she did. There's not a market for this. The statement ensures stability. Huh. You think this that the whole statement itself, like the whole like press release is like a credible threat? I mean, to me, like it very well could be, but it sounds very much like I don't know. I mean, I think they're going to do it, but I think yeah, for more than a reason, I guess it would be for the credible threat. You guys really helping me out. Yeah, I to be honest with you, this is great comments here. Very good explanation of it. Hi, Glenn. Thanks, Simon. Always useful, especially when you give advice. Well, thank you. I appreciate it. I mean, I don't know if I give good advice or bad advice, but I know that I've changed my life around a whole lot from what it used to be, and I'm heading off in a much better direction. So I don't know if that's like good advice or bad advice, but don't do what I had done. You know, maybe you should. I don't know. Like sometimes I think about it, like the worst times in my life was probably some of the reasons why I'm even made it to why I'm here today. So I can't really like say that it was bad to experience that because I don't know if I would be doing what I'm doing if I didn't, you know. All right. Let's see here. I'm late, but it's good. You're gonna make this public. Yeah, well, I think I mean, to be honest, I think it's like, I think it's information that people just simply aren't going to get anywhere else. And I mean, I don't know. I mean, there's other stuff that I think that, you know, we can keep kind of for members only just because I think it's, you know, good, valuable stuff that, you know, people can, you know, sign up for a buck and participate with the rest of us like this. And some of it I just like, I mean, it's got to get out there. And I think once people realize that this type of video content, being in the membership group and having like these kind of comments, like from Greg, I think this is it. This is the type of stuff that really kind of keys into making it so we just don't misunderstand what's happening. Like a lot of people will be like, you know, blame politicians for it. And you're going to be like, what are you talking about, man? This was planned for a long time, you know, and you won't be blaming it on some, you know, government official or something. I mean, you can blame this on a government official, but you won't be blaming it in when it's announced on a government official. You'll know that it's already happening. Let's see. Let's just, sorry, self. Glad you're a dude. No worries, all nighter. All right. That's why we love you. There's no magic formula information. No, there really isn't. That's one of the things that I think probably kind of finally got me out of like not necessarily like believing any particular economist out there, but knowing that they're just viewing it from the place that they're at. Like there's no way that some of these guys who, you know, like the Peter Schiffs and the, you know, the style, like these guys are like they're super billionaires, right? There's no way they know what it's like to. I mean, I'm not saying that they hadn't experienced, some of these people experienced the you know, a hard time in their life or something like that, but for the most part these guys don't have a level of understanding that is something of a survival mode mindset. They're in a very much an abundance mindset. And this is really where the difference is in like everything in key to the world, right? The key to having anything in your entire life is that if you're in a survivalist, you're in a lacking. You're in a lacking mindset, and that lacking mindset actually keeps you there. It's really strange to think. It's the abundance mindset that they have is the reason why they have an exceedingly amount of stuff, right? Or exceeding amount of wealth. And when you have a tendency to look for answers out there, it's because you're lacking, right? Once you're not looking for answers anymore, more just trying to be understanding of the situation, because there's like, you know, there's no answer to it. It just is what it is. Like, it's almost like trying to understand like why, you know, a girl doesn't like you, right? It's just like, there's no explaining it. It's just like they just don't like you, right? It's the same. It's almost the same thing. Like when you almost think like, why doesn't the economy like me? Right? It's kind of looking at it like that. It's not a matter of that. It's like it's the way you conduct yourself. Right? It's not the economy that's doing it. It's not the girl that's out there that doesn't find you attractive. She just doesn't find you, right, attractive. It's not like your fault about it. It's just, I mean, I guess it is in a way because you might be doing something that doesn't, that might not appeal to her, but that's not your fault, right? I mean, she's attracted to certain characteristics and you don't exude them. So again, like when you look at it, it's not the girl's fault, right? It's the way you conduct yourself, but you need to conduct yourself in a way that is attracted to certain people, right? And hopefully that is a way that isn't unauthentic, right? It's understanding that these are the things that I need to do in order to to be successful not only in life, right? Most of the time, that's so funny. I don't even know why I brought up girls like that. But economy and money and girls and everything else is so funny in life, like out there, because I talk to a lot of people, and it's so funny. Chasing excellence is the only thing you really need to do. That's it. Like, you just need to pursue excellence. Like, you pursue a better life for yourself, and that's it. That's like, you're motivated on an outcome of being, a fully functioning, fit, healthy, got it going on, whatever. All the rest of the stuff just falls into place. It just comes naturally. You don't even have to think about it, right? Even like I think that's probably one of the reasons why I'm somewhat inspired here recently with this whole membership thing is because it gives me something motivated towards. It's just like, yeah, like I knew, like I enjoyed studying economics and I enjoy doing the videos, but I've been doing it for like a while now. Like, what's the difference here? I know I'm trying to bring value, but now all of a sudden I feel like I really am motivated to bring you value, right? So now I feel like I'm chasing excellence again and I can feel it. Like I want to do it. And then with that, I'm starting to feel better about other things that are going on around too. And so this naturally starts to occur. And that's really how it comes down. So like even money or business or, anything that you really want out there in life, it comes naturally to you when you kind of forget about it and you just pursue, excellence as a human, as your own human person, man or whatever, or woman, whatever you're doing. So, anyhow, romantic comedy, happy to play a role. Okay. And play that role so well. The investment group I'm in are bypassing rates with cash purchases of rental properties that we are going to fix up and provide quality housing with. I'm finally getting on the ladder. Good for you, all nighter. It's great to hear, man. It's great to hear that. All right. There's going to be competition for decreasing pool of tenants. Depending on demographics, less tenants equals more home buyers and more equity, and less buyers and more renters to drive rents up. But that's not cookie cutter gonna happen every time. Property only has to perform for around a year for all the repairs and building. Then we cash out, refi, and get all our cash out, leaving a free asset. Of course, this is the best case scenario. There are so many apartments being built, I doubt they are going to fill up with tenants at the outrageous prices needed to finance the projects. Many, many unfinished apartments buildings on this downtown core, Hamilton, Ontario. Um, I agree with that. I have an apartment complex being built right behind the grocery market in down in the middle of Astoria, and it's like I don't know what's going on. It's like condemned right now or something. There's nobody working on it, and it hasn't for months. So I don't know what's going on with a huge, giant, big project eyesore right in the middle of town. What a waste of money. Okay, well, so far, what a waste of money. Depends on the area, but yes, some past hotspots are cooling very fast. I'm sitting under my air conditioner drinking ice water. All right, Charger Mopar. Can't feel my toes right now. All right, I can't wait for property purchase. The mighty duck himself. Okay, after afternoon, everyone. Gonna get cold out here in Indiana. Do you have a political figure would Do you believe a political figure would rise just like every major crisis we've had, like Ray Dalio mentions in his book, The Changing World Order? Uh-oh, where'd you go? What happened to that? Huh. Okay. What are your thoughts on politicians buying and profiting on stocks? I mean, I don't know what to say. I mean, other than that's probably the why they got into the position that they did is because they almost have immunity to do it. I mean, the Federal Reserve had some major, like some fairly respected officials, like what if you respect the Fed. I mean, but they had some fairly respected officials get, basically busted for insider trading, and they resigned, and nothing happens to them. So at this point, I guess it's just part of the price of doing business, cost of doing business. If you want these guys up there leading us, then they get to, screw around and do the insider trading stuff. I don't think it's right, but I don't know. What are you going to do about it? Like, nothing. Like, there's nothing you can really do about it. Except for, I guess, try to become a politician, do it yourself. All right. I am very familiar with the survival mindset. Well, I am too, and that's the problem. Is that, even now, I still experience it. Like, I feel weird trying to promote and market like this whole membership thing, right? Because like, it's just like, are you even worthy of it? And that's like the problem right there. It's like even asking the question, are you worthy of the money, is just like is the reason why it doesn't show up, right? And that's the problem with it in itself. It's one of the reasons why I love that it's $1. It's an insignificant amount to you, but it's everything to me, right? That's what I'm kind of getting at. It's like it means so much more to me than you might realize. Not only in my motivations, but in everything that I'm doing. And it's just like, and so having that like more of an abundance mindset, like where the things that you're doing is just going to naturally bring money towards you. You don't think about how much money it's going to make. You just know that it's just going to do it, and that it should come to you, right? Having that thought in your head when you don't have it is like almost impossible. It's like almost impossible to have that thought, and that's one of the reasons why people end up getting stuck, in it. And until something like either accidentally happens or they just grind down on something and finally just make something happen and realize how it works, a lot of times it's very difficult to like it's difficult to understand what it is to even have a mindset that's not a survival mindset. I've seen people who have been successful at what they do fall into a survivalist mindset and not even realize that they're doing it. And I'm like, whoa, chill for just a second. Think about what it is that you're saying right now. And remember that you are looking for a future outcome instead of thinking of what it is that you need to do to provide the value and excellence to the world that is going to bring you what it is that would come from that. Right. And instead people are like, oh God, I got this bill. I gotta come up with $100. I gotta do it. And then they start thinking about this stuff. Right. And this is the reason why it's always staying out there. Just, just like anything, you put it on a pedestal, you put it up there on an elevation or whatever, and you say, oh God, I really, really want you, then it's going to be very like, distancing, like everything has the same energy. Everything does. Like, I mean, a great analogy is playing with the dog. Like, I've used this one before. When you play with the dog and you start chasing the dog runs. Like, the dog has the ball or whatever, you give me the ball, and you start, gimme, I want that thing from you. The dog's like, like running pretty soon. Like the dog's like, no, don't even stay away from me. In fact, they keep an eye on you. And anytime you move, they jump up and move away. But the moment that you're like, nah, I don't want to play with you, get away. And they're like, here's the ball. Take the ball, throw the ball. Here's the ball, here's the ball. And you're like, nah, stay away, right? All of a sudden, they're like, everything has that energy. And how to manifest and make that energy work for you is like the secret. That's the secret. If you want the magic secret, figure that out, right? Figure out how it is that you can have the energy of having the money chasing you, right? Or having, whatever it is in life chasing you. And that's where you provide value to the world. You bring excellence. You be, active in that and bring some sort of value to the world. Generally, the abundance just naturally starts coming towards you. People are like, yeah, there it is, All right, moving on. So the Federal Reserve has guaranteed repurchase of these type of assets in the past, but they now are trying to reduce their balance sheet, but they need to ensure that the banks know that the buying. So this is how they're working with the Treasury, essentially, is what you're saying. They're going to continue to unwind their balance sheet, but the banks have to know that there's going to be somebody there to provide the liquidity that the Federal Reserve would typically be there doing. I think that's what you're trying to say there, Greg. Low interest rate treasuries isn't a death sentence and will let you trade them in at a later date. So this is also the Treasury helping the Federal Reserve work down its balance sheet in an attempt to provide stability in the future, since the banks will now know that they can trade in a low interest treasury and lose out on an opportunity cost basis. QE of a different kind. Yep, QE of a different kind. Now that's accurate. Yeah. And so I think that's probably a better way to talk about this as opposed to like a liquidity crisis. I think it's QE of a different kind. And when is QE provided? During liquidity crisis, right? So anyhow, but I think Greg, thank you for being here and commenting, man. This is great stuff. And not lose out on opportunity cost bias. I'm late. Well, that's okay. You'll have a chance to see it again. Hey, Django, this has been a good one. Yeah, it has. Thank you, All Nighter. Sup, All Nighter. Yes, I'm having to catch the replay. I wonder if AI could solve the U.S. budget, but also what would be the impact of the U.S. being debt-free since we run on loaning out money? I don't, well, outside of like Andrew Jackson, I don't think there was ever a time in the United States that we were ever like debt free, right? Um, and even then, it was like it wasn't like there was great times happening. So I don't know, like debt free, that would be very difficult to operate in, considering that we don't really produce anything for ourselves, right? So we have to buy our standard of living, or the way we live, everything from somebody else. And if that's the case, then we need to be able to provide them with something that's not debt, right? If you want to go debt free, and we don't have anything to provide them. So no, we can't, right? I mean, unless we go back to a gold standard, which basically means that we would be in poverty within a matter of, a month or whatever, because we simply don't have enough gold to support our standard of living. Unless we come up with a manufacturing base that is enough to support our standard of living overnight, then I don't see how that happens. Like, I just don't see how it can happen, or will. Okay. Simon, your content is unquestionably worth paying for. Seriously. Thank you, Brody. I appreciate that. I mean, I put a lot of effort into this. I put a lot of effort into, trying to find the stuff that is important. Not I mean, I could come out like, I've done fear mongering videos, I'll admit it, right? I've done it, come out here and try and scare, make a scary video or whatever, and you get paid for it. Like shit, you come out here and you like raise somebody's emotions up for, 10, 15 minutes, and, you get paid. You get paid. Right? And so, I've done acting in the past. I can do it. I know I could do it. I got the audience base and I know how to do it. And I got enough material to create as much like conspiracy theory minded like outlandish stuff and make it seem so like on the edge about ready to end the world stuff. I could do it. Like I know I could. I'd be good at it. It's not what my intentions are here. I don't think that's valuable. I don't think that brings any kind of value, you know? Like there is valuable stuff in that because they have nuggets of good information within it. So I'm not knocking anybody's YouTube channel out there or the way that they do it. If there's a lot of people who want that information delivered to them in that fashion. I know that I enjoyed it for a while, like especially when I first got into this information, like the Alex Jones kind of thing. I was into that. I mean, I enjoy. I'm like, oh my god, look at what's happening here, you know. And I like to get my, all worked up over the whole thing. But then I realized that it doesn't really help me. You know, it doesn't help me understand and it doesn't help me make good decisions, right? Especially if you're living in a fear mindset, right? Because again, it's just like being in the survivalist mindset. That sort of energy. This is what's really really interesting. The more I study and understand and learn and just kind of figure things out, there's a lot, especially when it comes to this particular type of information, because it's incredibly depressing, right? Some of the stuff that you read about, you hear about death and destruction and famines and and all this other bad times and people going into like experiences of destitutions and things like that. Like this is not fun, right? It's not fun to read about stuff like that. It's not fun to understand that how that occurs, but it is important to know it, right? And it's important to like understand it in an objective way. One that says, yeah, I mean it sucks, and there's nothing we can really do about the economic forces that causes this, right? They are economic forces that are going to happen, and I'm not saying you have to be accepting of it. What you have to do is internalize it so that you understand why it's occurring, so you don't position yourself in the wrong spot, right? It's like being on the job site and the hammer hitting you in the head. That was one of the analogies we used. Everybody wants to come up with this reason why it happened. Even people are over there fighting over the reasons why it happened, right? Meanwhile, it's some guy who comes down and it was just like, y'all trying to figure out how come that hammer killed that guy. I can tell you it was gravity. Right? It was an economic, or it was, a natural force that occurred. Somebody else used the term mass, which, but whatever. It's still like kind of in my opinion. So, it's the natural force that did it, right? Now, there's all kinds of reasonings that you can put into why this natural force caused this to happen, right? But it was still a natural force that occurred. And if you know the dangers of those natural forces, you might have positioned yourself in a way that didn't get hit by the hammer. Right? That's really what it comes down to. And I think that's a really good analogy too, because it just like you can put the blame anywhere. You can put the blame on the corporation, on the job site, on the person, on the tool, like all this blame can be put around, but really it's just like there was one thing that really did it, and it was the natural force. And if people recognize that, then they can position themselves in a way that doesn't get hurt. Brody asked last week, not trying to steal the question, but interested too. Okay, great. Was the question didn't get the chance to answer. What is your thoughts on Bill Gates buying so much farmland? I think I could let my conspiracy mind go on that and say, hey, like, all these, New World Order stuff is going to come down. We really have to understand, like, there's three people who live independently, right? Everybody else has to rely on the state or the property owners or the rich or somebody else, right? But there's only three people. Even people who think like, man, no, I'm independent. Like I work for myself, man. I don't rely on any of those. That's horseshit, right? That's not true, right? Because you have to eat, and unless you're producing all your own food and your electricity and all the other stuff, then you are reliant, right, on the system out there, and that system is not something that you are in control of. Okay. So now there's three people who are going to live independently of the state, right? You got the prince, whoever that is. I'm sure in other countries you probably have something, there's probably something like that going on, right? The prince, the property owners, and the capitalists who invest into it. Those are the only three type of people who are going to live independently. Okay? And that's important to remember. Everybody else is dependent on one of those three, or a combination of the three. So understanding that, like, Bill Gates is up to the level of property owners, right? There's very, like, even owning a house, owning 100 houses or whatever, still isn't quite to the property owner yet, right? I mean, you got a lot of properties, all that other stuff, but it's not until you get to the level of, like, being the person who is in charge of whether or not the investment going into farmland feeds an entire nation of people. Like, now you're talking, like, you could sell, like, if you have 150 homes or something like that, and you sell out of it, it's going to be like a big impactful thing, probably for the, maybe if you have it in a concentrated tight community or something like that. But you have 150 homes spread out across the nation, and you sell out of them in one day, nobody's going to notice, right? Nobody's going to care. But if Bill Gates all of a sudden decided that he was going to dump or not farm all this stuff, there's going to be a note that people are going to notice, right? So this is the difference, right? And this is why, like, I understand this sort of level of like where it is that we are positioned in the economy. There's these people that we're talking about, right? The property owners. There's politicians, and then there's us. And we don't get to communicate with them. We have to communicate through these politicians. And through the politicians, they conduct whatever it is that they feel is appropriate for the behavior of the people or whatever, right? So this is the way, like, the modern day slavery kind of works, and I'm aware of it. Like, I mean, it's just like, it's not, to me, it's not like, it's not something to be mad over. It's just the way it ends up being, and you just have to kind of deal with it, And there's nothing you can, I mean, I don't know what you can do to fight it other than to be 100% independent of everything out there, which is like, I don't know how you're supposed to do that. Electricity, food, everything, like, that's like, and then where are you supposed to live where you don't pay taxes? It's just like, unless you're all-nighter and figure out how to do it. All right. Think self-education. Yeah, that seemed odd to me. What was that about? I'm sorry, did I just miss the question, or I might have blew over it? Seems like the smart play to buy so much farmland, but Gates' prior comments seems like an evil play. I am sure I got the mantra I use daily for maybe 6 months now. Every day is a day of opportunity. Now I see more and more opportunities. Thanks. Yeah, absolutely. Like, this is what's really strange about, like, I hear people say, man, you can't really make it in this world, or you can't, the wages of today just don't pay and stuff like that. And I'm like, well, of course the wages of today don't pay. You got so many ways of making money now. All these people are making money online and doing other stuff. If you have a day job, right, you are competing against people who are making money in all kinds of fashions. So no, you're right. Your day job doesn't do it. Like, it's not going to be enough. You got to have your day job plus all kinds of other things. I mean, just like me, I'm constantly trying to figure out a way to have some sort of income flowing in. I don't necessarily think of, like, oh God, I got to get this money and figure out a way. This is like, just another thing. What am I doing right now to work on, providing for the YouTube channel? What am I doing right now to set up for my day job? What am I doing right now to get ready to, call bingo and entertain or do whatever it is that I'm going to do at the time? It's always a progression towards something like that. I never take a moment and say, like, oh God, it's 5 o'clock. From now until 8 o'clock in the morning, I'm going to do whatever the hell I want, right? That never comes across my mind. Like, if somebody is like invites me, it's like, hey man, you want to come up and sit around a campfire? It's just like, yeah, God, I got stuff going on, man. I mean, I got to take away from, like, what I got going on to go sit around a campfire, but I really want to be social, like, and so, like, this is where my dilemma starts to come in. And it was just like, man, if I'm gonna do this, it's going to take away from, like, this is the way I ended up feeling about it, because I got so much that I gotta, like, should be doing, right? Chasing excellence is trying to make it there. If I had been doing this since I was 18 years old, then right now I would love to be sitting around that campfire. I would be all about it. I'd be like, man, I'll be there in a minute, man. I would, but I screwed that up, right? Like from 18 to 40, I did nothing right. Like I saved nothing, had nothing, ended up with nothing. I was broke with nothing, right? Here it is. I'm 47, right? And I might be on like YouTube and have like 100,000 subscribers and been able to generate revenue occasionally on times, and sometimes it seems like a lot, but a lot of times it doesn't come in. YouTube isn't exactly friendly, okay, when it comes to that sort of thing. And I'm not really fond of taking sponsorships. It doesn't feel good to me. Like I'd like to do something like this, sponsor myself, to promote myself, to do things for myself. Like using the YouTube platform is perfect for this reason, is like I can excel myself doing this for myself without having to sponsor or be part of anybody else's thing. Just do it here, making these videos. Anyway, man, I get lost on some of this stuff. Why do I babble on? I'm working on the abundant survival mindset as well. Hard to break, as been doing survival for so long, working on it. Well, good for you, DG. It's just, it's literally daily efforts, towards it. Just, constantly put yourself in a position in which that what it is that you're doing is going to, bring some sort of value and excellence to the world, right? That's really what it comes down to. No matter what it is, it's a mastery of something that's out there. It doesn't matter really what it is. And I know that's funny because people might like, it doesn't really matter what it is. Well, it really doesn't. Like if it's, I mean, I think about it. Like if you, okay, like just for example, like me, I always think of videos because it's just so natural for me to like, try and make videos and do stuff like that. But to me, like YouTube is a place in which that you can share what it is that you are doing the best of, right? And if you can like show somebody how it is that you can learn at the same time they can learn, then that is usually one of the most engaging kind of videos that you can find out there. So if you're learning something at the same time you're like showing the progress of your learning, man, it's like everything just starts happening for you. Like you find people who are, happy with the progress that you've made, and want to like share in the experience of it and just all that other stuff. That seems like kind of magical experiences. They aren't so magical. They're just naturally occurring, that would just be there. You just got to put yourself in that position. It's kind of like playing the role, all right? Like the world doesn't know what you want if you don't know what you want, right? And if you don't play the position of what you want, then the rest of the world doesn't know how to treat you. Think about it. If you're on a football field, right, and your position is the quarterback, right, but you don't play the quarterback, right? In fact, like don't even do anything that's even remotely close to what the quarterback position would do. Then people are going to be like, "What are you doing here?" Right? Like, why don't you just go stand over there and we'll play the game, right? And we'll find somebody else to do what you're doing because you're not filling the role, right? Or if you start doing something else, like all of a sudden you're not lining up in a proper position, then people are going to look at you in that fashion, right? But if you just take the position, it's like, no, I got this. I know what I'm doing, right? And even if you don't know what you're doing, the first time you get handed the ball and you just kind of toss it off into nowhere, it was just like, oops, sorry. And people are like, dude, I was wide open. You should have tossed it here. And you're like, oh, yeah, you're right. I should have tossed it there. Next time I'll do that, right? And you toss it there, and then over a sudden you're handing it off and you're doing whatever, and you understand what is happening there, and everybody starts treating you like that position. They're telling you where you need to be, and you're listening, and you're trying to occupy that position, and pretty soon everything starts lining up, and the game starts getting played, right? It's the same thing. And I know that was kind of a weird analogy to use, but if you just think about it in a simplest form of like that, if you are in a position or you're expected to play a position and you don't play that position, everybody's going to hate you, right? But if you're expected to play that position, even if you don't play it good, right? But knowing that you want to be in that position and actually performing as if you are in that position, things will start lining up to have you in that position. And then it'll just be that position. You won't even think about it anymore. Or you won't think about like what it is you need to be there. You'll just know that you are there and it's that way. So it it works for everything that way. It's so weird to think about it, but it does. And you also have to be patient in understanding that things take a while to line up, right? It takes a while for those people to be accepted. Is he a good quarterback or not? Like, I mean, the last few plays he did all right, but I mean, really, I've seen him screwing up for a while now, so it's going to take a while, right? But once you understand that you're not screwing up, right, then they're going to be like, well, damn, they're actually pretty good at what they do. Yeah. And that happens. And, and you'll be like, yeah, I've been this good for a long time. It just took forever for anybody to notice because I screwed up so much. Does that make sense? I don't know. I just talk out my ass sometimes. Okay, here we go. I'm trained as an outdoor survivalist teen. Winter, summer, I see this has leaked into my life decisions. Interesting. I never understood the whole Alex Jones mentality. Yeah, it's because it's triggering, and that's ultimately what it comes down to. And I mean, I know I've done it here on my own channel, a couple of times, where I'll put out videos that are like, end of the world, whatever. All right, my good buddy, investing partner, Millennial Mike, has done good videos on his survival to abundance mindset transition and gratitude. Yeah, and that's really what it comes down to. Is it's like if you're having a hard time finding this, look at the things that you're really grateful for that you do have in your life, the things that have been successful, and then just focus on those things. Because what ends up this is really what ends up happening, and why the survivalist mindset as opposed to the abundance mindset is so overwhelming, and then sometimes such a feeling of being like stuck, is because if you can imagine just like anything else around you, like an aura, right? It doesn't really matter. You can consider it a net or a bubble or something, right? And throughout the day, throughout everything you hear and everything you speak, right, this bubble fills up with all this little bits of everything that you have ever heard, right, and seen and think about, right? Now, what's very interesting about this is that out of all this stuff that's going around that you've heard, all the stuff you hear on my channel and the things you hear, throughout, going through the grocery store and all the little bits of stuff that comes in there, you're only going to really like recognize and pay attention to about 40 of these things. All right, these 40 bits of information that's coming through. Right? And this is really important to understand, because the most common things that are in that view that you have, this is why it's difficult to be around negative people, because those bits will be negative impressioned pieces of information that you are now focusing and viewing on, right? So everything that you are now doing is filtering through, right, this negative information, this negative bits that you have picked up. So this is where it gets really critical, because if those bubble, right, is filled with all the reasons why you don't have anything in your life, or all the fears of, man, all these things are going to come down and get me, or how am I going to pay that bill, or all this other stuff, there's no view that you can have ever that will ever put you in the abundance mindset. It will always have these negative views and this negative, idea or filter going through. To change that is to be grateful for the things that you do have in your life, and to be thinking of what it is that would be positive and aspects of positive people that you want to have within your life, right? So it's not necessarily being in business with a particular person, like saying they do, they sell insurance or something like that, and you don't want anything to do with insurance, but their personality jives with yours, right? You get along with them really well, and they're motivated, they're pursuing excellence, they're going for their thing, they're doing their business, and they're hardcore. That's the type of person that you want in your life, right? Not the person who's just like, man, this business sucks, it's hard to do it, I can't work, I hate my boss, all this other stuff. That's not the type of person. So once you shift that, right, and you start getting into these type of, kind of atmosphere for your little bubble that you're in, right? Because we're all in our own little bubble. No matter how much we tune into other people, this is the facts of the matter is that you concentrated within these thoughts of your own. So once you kind of fill that up with the positive mindset and the flowing of things coming towards you, as opposed to you having to come up with you know, the things that everybody needs or whatever to have money flow towards you, you just need to be the value. You just need to bring the value, right? You don't need anything from them. You just need to bring the value. They will naturally want that value from you and be able to provide you with the things that you need. It's so hard to understand that. Like, this is very esoteric thinking, and it's taken me forever because I had to figure out what was going on with my YouTube channel when it took off. I didn't know. Like, I was just like, I'm like, whoa, man, this is just flying out there. Why are so many people? And they kept coming to me and were like, dude, because your information is really good. You're talking stuff on the lumber industry that is saving people money. They're, either pulling the trigger on the projects now or postponing them because of the valuable information that you're bringing them, and it was being rewarded to me, right? And that right there, I just didn't understand it. I just couldn't figure that out. Now I'm starting to get it more, especially since I felt like for a while I had like this very critical, opinionated, not really providing useful, relevant information. I was just kind of putting out this opinion all the time, and I don't think that was doing very well for the channel. Now that I have this motivation back to me again, I have a much different thought about what it is that I'm trying to do for the channel, and I think it's working out pretty well, as far as bringing that value to the channel again. All right, man, I've been going on for 2 hours. Holy moly. Okay, I'm gonna read through these comments and try and kind of get through this, because I think the boy wants to go down to the river and see what's going on down there. It's super cold. It's gonna be chilly. All right. I'm reminded of the It's Always Sunny episode of them laughing at the new poor people. It's important knowing how to be poor and comfortable. Yeah, it really is. And I think that's probably one of the things that I actually am somewhat grateful for, having been poor or feeling like really low in my life, is that it doesn't bother me to drive an old car, right? It doesn't bother me to back up and cut back down to just the bare minimums again, because I've lived there for so long. To me, that's where I've been. Like, that's not uncomfortable to me, right? It's uncomfortable to move into like something that's more like what you would call luxurious, which most people would just call normal, right? But to me, that would be moving into luxuries or something like that. What I know about the Cantillon effect and everything kind of keeps me cautious of that, but also knowing that not always is it going to be easy flowing happy times, right? That sometimes you're going to have to go into some hard times, and sometimes it's really hard. And having experienced it, the hard times now, well, that ain't so hard. I mean, I've experienced hard times, so right now it's just a little uncomfortable, right? You could say stuff like that. But experiencing it is the important part, because if you have never experienced it, when you fall back, you get into depression. It's really hard. Like, most people who fall into the level of like, no, we're gonna have to wait a couple of days to get some milk. Like, have you ever experienced that? It's tough, right? And there's some people who are like, milk, I don't even know, man. I don't even know when I'm gonna be able to buy a gallon of milk. I've never been there, but I've been to the point that it's been a couple of days. I know now that that seems like a far off place for me right now, to think that I would have to wait a couple of days to buy a gallon of milk. But I've been there, and I know what that feels like, right? And it wouldn't be new to me. It would be upsetting, but it wouldn't be like, oh my God, what's happening to my life? How am I supposed to? I've been here before. I understand what's going on. Much different levels, right? Again, it's all about that mindset. Okay. Only other economics. Okay. Only other economic videos I follow other than you. I'm Gregory. Other than UE is Gregory Manarino. Yeah, right on. Gregory's a great channel. Gregory Manarino. I followed him for a long, long, long time. Yes, sir. He's a fun guy to watch too. Absolutely is. I was looking into the past 2 moments when the yield curve snapped back to normal, and noticed that after the 2000 and 2007, 9/11, and The great financial crisis happened 300 days after the yield curve normalization started. Yeah, and wasn't there some sort of inverting and then inverting of the yield curve just before the pandemic? I kind of remember that. Feels like there's quite some time left. If that time hits again, I would not expect the start of a liquidity crisis before the election. Yep, George talks about the shit hitting the fan after the curve has corrected and the Fed drops rates. Seems to be typical. Yep. The rat's treadmill gets someone else to their goal while keeping the rat stationary. I feel the same way about wasting time now. I'd rather be productive in some way rather than waste time away. At least during the day, every dollar helps. Yeah, and this is what's crazy. I just wanted to kind of put this out. The other day, like I wake up, I do some research to for the live stream that I'm going to do on Wednesday. So I get up, I do a little bit of research, I go to work. At lunch, I do a video to promote the live stream, go back to work. After work, I do the live stream. I do that till what it was, excuse me, 7, 8 o'clock. I don't even forget how late we went. I get home like around 8:30. I eat some food, kind of hang out with the family a little bit, lay down in bed. Sarah's going to sleep. I pull out my phone and I'm going to start doing research. Like I'm going to start reading articles. And I literally, like, I look at my phone, I look over at Sarah, and I was just like, what am I doing? Like, I'm done. Like, I'm done. I went all day. I'm done. Just put the phone down, right? So I literally, like, I plugged my phone into the charge, I turned it off, I set it down, and I went right out. I fell asleep, like, within a minute or two. I don't even think it took me 2 minutes. Right? I went right out. The next day when I woke up, I told myself, it was just like, don't do anything today. Don't do anything for the channel. Don't do any videos. Don't do anything today, right? And it was so hard. It was so hard not to. I couldn't help myself. I read articles. I looked at emails. I did, like, I mean, there was. I could not do it. And even like at lunch, I I didn't do a video. I had 10 minutes before I went back on the lunch. I literally set my phone up on the door, and I'm starting to hit record, and I'm thinking, dude, you don't have time. You don't have time to do this video. What are you doing? Take your phone down. Like, I mean, this is literally happening to me. This is what's going on. And I was just like, what is wrong with me? Like, am I so adamant about being nonstop working that I cannot even like go one day without possibly trying to do something for you, for the channel, or whatever. And I mean, I went to my day job that day, so it wasn't like I didn't have anything to do. But this is the mindset that I'm in. Like, this is how I operate. And I mean, I think about it, it was just like, man, I should really be putting this kind of effort towards like actually pursuing money, or doing something like that's actually going to be more monetarily gainful. But that's not really what I feel is like important. What I feel is important is like putting the videos out and getting the information out. Like, chasing money doesn't seem important, right? But I guess I should be doing that. I don't know. Chasing, or having money chase me, or just pursuing it. I don't know. Anyway, here we go. I feel the same way about wasting time. Okay, here we go. I hope that the channel memberships are helping make ends meet. Not yet, like, cause it's really we have 215 members, so thank you very much for everybody who's joined the channel. YouTube takes a decent chunk of it, so I mean, but really, what do I have to do other than use the platform? So it's pretty nice that they have the platform to do it on, and I get a little bit of ad revenue from it too. So, but no, just to kind of give you guys an idea, like the YouTube revenue is really, really volatile. Like it, and especially like the algorithm when it comes to views, like that there's like really no rhyme, no reason to it. I try to put out the best videos I can. I could put out fear-mongering video kind of stuff and maybe get a little bit more attention from it and get some more money that way. But ultimately, the ad revenue isn't but a third of what I was getting, say, 2 years ago. And it has, like, over the course of I would say the last year especially, it has dropped significantly and dwindled. And like even right now, I'm like looking at it, it's just like, man, I'm gonna find something, find some other place to go. I don't even know. Like it's just like it doesn't even make sense to why it's depleted as much as it has. But I figured, well, I mean, something will work itself out, and I'm not going to stress it too much. I haven't changed that much, right? I mean, I put out as much content and everything that I have always done, doing what I feel is like, being consistent as I could possibly be with the channel and the videos and the style and everything that I'm doing. So I don't know why it would be, why they would pick on me other than the possible information that I'm putting out. But I mean, there's people out there who put out way more, like way beyond what I do, so I can't imagine that being the case. It's just, maybe I need to go, maybe I need to have a lumber crisis again to happen. That's what it is. All right. I'm new here, so who is George? Is he in the room with us right now? I want to follow George. George Gammon. If you don't follow George Gammon, you got to check out George Gammon. The dude is on it. We met a few years ago. He had just, well, he had his channel up and running for a while, but it was like kind of this, I'm not going to say boring, but it was kind of like this real estate channel that didn't have a lot of attention to it. And he started doing macroeconomics, like did these whiteboard videos covering macroeconomics, and they were good. Like they were really good. And I did a shout out. I'm like, hey guys, I had about maybe 5,000 subscribers at the time. And I'm like, hey guys, you got to check out George Gammon. This guy is like on it. This dude really knows his stuff, and he puts together these really good videos. These whiteboard videos breaking down economics, and he was taken back by that. He was just like, he gets a hold of me, and he was just like, hey man, thanks for the shout out. I really appreciate it. I gained a bunch of subscribers from your channel, and I tell you, I'm like into real estate down here in Colombia. I had this reality show. I got a crew of people who are working on my YouTube channel. I'm going to have them get a hold of you. We're going to upgrade your channel a little bit, get you kind of up to date. What do you think? And I'm like, well, thanks, bro. I really appreciate it. So, George and I were kind of friends there, and we communicated a little bit. Well, then George takes off. Boom. He gets on a rocket ship and shoots himself up to, 300,000 subscribers practically in months or something like that. And I'm like, whoa. I mean, at this point, I'm like still down at like 10,000 subscribers or something like that. And he just blows up. Now he's got all the heavy hitters on his channel, all Peter Schiff and Jim Rogers and all the guys, like all of them, like all the cool people. And I'm like, wow, man, like holy moly, you just shot right up there. And then he had the Rebel Capitalist live event, and he invited me to go speak at it. So like I got to speak on stage to the same audience as people like Robert Kiyosaki and Ron Paul and gosh, who else was there? I mean, all the big people were there. It was awesome. And, All Nighter was there too. All Nighter was, yeah, and I'm sure maybe some of the other viewers here were there too. But that was a huge turning moment. And like George and I don't really talk that much, I mean, like I haven't talked to him since the last time we were at the Rebel Capitalist event. So it's not like, I'm in like close communications with these guys or anything like that. But what ended up happening from it is that I ended up meeting and building a network that I am now in communication or can be in communication with all these dudes. Like anyone, like if I called them up or I have their number in my phone, like, dude, how's it going? But I don't do that, right? But I mean, I could pick it up and it was just like, hey man, I need to ask you a favor, and they would be like, what is it? Like they would actually listen to me. And that's like so odd, for me to even like, trying to imagine like, back when I was 40 years old, trying to figure out how the hell I was going to get to work to now it's just like, man, I actually have these people, like I'm communicating with them. That is like, whoa. So yeah, that's George Gammon. All right, same here, Putz. I, in a healthy way, don't really enjoy music or movies like I used to. I wised up to not watch TV over the decade ago. Yeah, I don't I have a TV and I have movies. We have DVDs, and I like literally have to like force myself to watch the movie without like picking up my phone. So the problem is that our current system, the most common way to become rich is by taking opportunities from others. I disagree. I disagree. I think the best way to make money is not by taking opportunities away from other people, but by providing a way to, or providing an ability or a process or a product of some sort that gives people the ability to then provide for themselves a better life. That right there, I think, is probably the best way to make money, right? Or to provide for an abundance flow towards you. You know, I think about like, I think about like the Andrew Tate, Justin Waller style, thing where they put out this information on like how to be like, a real man or something. Be a masculine man to bring yourself, to present yourself in this world in a way that is like, fitting to the energy that you want to carry. This kind of information, these like, the course, the program, the whatever it is that these style of people do, that's helpful to those people, the people who receive that information, right? Same thing for somebody who's wanting to cook or anything else out there. Trying to provide something that makes their life better for themselves is like probably the ultimate form of being able to get an abundance flow back towards you. Taking an opportunity away from somebody, yeah, I mean it probably works, like to like, monopolize, like to take all the opportunity and just have it for yourself. It probably works, but it's also difficult because what you end up getting is a repercussion from the efforts of it, right? Like people don't want to work with you anymore, and it makes it difficult to try and get deals done, and stuff like that ends up coming from that. So it's not like it doesn't work, but is it better than, trying to provide? Because if you try and provide a value, then it's easy. You just be valuable. All right. Gosh, guys, I should probably. I don't know how much longer we should go here. Okay, I stopped watching movies in 1984 and turned the TV off in 2010. I get more out of elevator music than pop. Yeah. What's that frequency? George Gammon. He's another great content creator with the accepted YouTube economics verse. George Gammon is entering and informative, but is entertaining, informative, but I am very suspicious of his overpriced clandestine conferences. Yeah, I don't know, man. If you ever been to one of them, I don't know. Have you ever been there to one of the Rebel Capitalist events? I mean, they are expensive. I mean, it's $800 to get into these things. But holy moly, talk about the group of individuals that you're surrounded by and the ability to start networking. Like when you get in these rooms, these aren't like, I mean, I've met some serious people at these things. Like, even Justin Waller. Like I met him that, at the Rebel Capitalist event. And and it's funny because like a lot of ability to do like to advance yourself and stuff like that is literally just in the communications of being with other people, right? It's like they don't even really have to do anything. You just have to be in a communication with them and say, hey man, are you guys, participating in this particular event? How is that going for you? And then understanding and being part of that thing right there then gives you like this energy and ability to then start doing these things for yourself, right? But if you're not in it, like if you're looking at it from a distance and you're like, man, how do I do that? Right? How do I do what they're doing over there? But if you're mixing in with them and you're in communication with them and you're networking with them, it's very valuable. I mean, that's what I see people doing when they're there. Like, they don't let that $800 just for entertainment. They're there working. Like they are putting together like their programs and doing, selling their pitches and doing what they got going on. George lives in another country and thumbs his nose here. My reason for attending the conferences is to meet fellow viewers and get energized by being surrounded by people of a similar mindset. The info is just as a bonus for me. See, exactly what I was saying, right? I mean, it's like All-Nighter knows. He knows the same thing. I never understood why George hides the location of his conference. That's very shady. He hides the location? There The one I went to, the one I spoke at was in Houston. Then we went to one in Miami and then Orlando. And I think he's doing the next one in Orlando. I don't think they're hidden, are they? Yes, all-nighter. I can't stand sitting still knowing I can do something to improve my future or the people around me. Right? Simon's deep thoughts, excellence. Well, I'm trying. Sometimes I get out there. Thanks, man. I know this George never clicked with him very much. Huh. It's called stoicism. Right, Puds. Time is like inflation, so sitting still is losing. I love my cheaper vehicles. If you don't like your car, clean it. No money for food, head to the canal with a net. My car has no floor, so it's self-cleaning. I love working, especially on things outside of my day gig. I'm about a third of the way in, and it sounds a lot like Treasury doing their own version of QE. That's exactly what this is. This is what the bond buyback is essentially doing. I think that's what he kind of says there too, within the press release. I enjoy some repetitive outdoor work where I can do things while thinking of other deep subjects. At the same time, it also serves the purpose of paying off their debts. And if the price sensitive to their buyback, that means they want to pay off their high interest debt first, since those are the bonds with the cheapest price. Have a great weekend, y'all. Stay warm. Gotta run. Thanks as always, Simon. Well, thank you, Putz, for being here. Okay, so they'll be doing buybacks on a different maturities than the current issuance. So maybe they'll do buybacks on 10-year bonds and fund them with 2-year bills or vice versa. Interesting. All right. The network effect is well known. The problem is when people take advantage of it for short-term financial gain instead of long-term financial effect. George Gammon Beaver discloses never never discloses the venue, the city, yes, but never the actual location. Oh, you know, that might be the case. I never thought about it. And that's probably because it's probably because that part is probably because they don't want like an overwhelming amount of people just showing up there, right? Because the conference, like, I mean, I don't want to describe the conference in too much detail on like, how easy it would be to break the security breach, because there's like, I mean, it's pretty limited as far as that goes. It's not like they have like, security guards at every part. I mean, there are people there like, paying attention and watching, and you do have like tags that you have to wear in order to get in and out of the conference. But I could imagine that if there was like an overwhelming, like a mob style group of people who decided to overwhelm the conference, like I don't know how you would stop people from like just moseying in unless you actually started gating and funneling people through gates, or something of that nature. It's very like casual type of event, especially like the cocktail party part of things, which is not in the conference itself, but outside of the conference. There's like, that part of thing is very, very casual. Like, I mean, I think just about anybody could probably wander up to that. Not to invite anybody to doing something like that, but that's kind of like the level of security at that portion of things. But of course, that's not in the conference itself. So that may be one of the reasons why he does that. And anyway, oh, There, see, All Nighter actually just answered that. Okay. Uh, when he had the conference here in Miami, I did figure out where it was by asking people I knew in the hotel business. Yeah, and so that's and that makes a lot of sense. Like I mean, I like the event itself. If you go and you take a look at what ends up taking place at these events, and you count the amount of people who attended these events, and you think about how much money goes into it, it makes me wonder how or if George makes money doing it. Like, I mean, I'm thinking, I mean, I know how much like I I like just went into my to the efforts of getting me to the conference and speaking and stuff. And I think to myself, like I'm like the little guy, like I'm like the sideshow, like he had the keynote speakers and big time speakers and stuff like that. I was like a fill-in, right? And I know how like the efforts it cost, for to get me and my wife here to the event. And I think about all the rest of it, and then all the people who work for him, and then all the hotel, and then on and on and on and on and on. And I'm thinking, what? Like, how in the world does George make any money at this, right? So there obviously he does, or else he wouldn't do it. But this is the level of like experience that it comes from. It is just like, man, I don't even know how like how it is that this is even a profitable gig for him to make this thing happen. You know? And so yeah, I would see why you wouldn't want a bunch of people just showing up, without paying. When he had the conference here, oh, we already read that. Does George pay people to speak at his conference? That would be expensive, plus the venue rental. Um, I mean, I don't want to like, you know, I mean, I don't want to say like how much he pays people to speak and stuff like that. I mean, because I would imagine that because yes, I mean George did give me some money to, but it was like he says, hey man, I know like you got things like you got to eat, you got to there's a hotel, there's stuff that you're gonna end up spending money on for being here. So like to me, I mean, it was like I looked at it, I'm like, wow, thanks George, to me. But I mean, I'm kind of impressed by money, especially at that time because I didn't have any. I still don't really have any, so yeah, But he handed me some money, and that's kind of like what he said with it is just like, hey, you got food, you got rentals, you got car rental and stuff like that going on, or taxis, and so that's what he put. I don't know how much like he would pay Ron Paul or Robert Kiyosaki or Lynn Alden or something like that. Like, is he paying? Like, did he give them what he gave me? I don't know. Like, I have no clue. So at that point, yeah, it was just an added cost to it. I mean, he flew me down first class and put me up in the hotel, like a really nice room in the hotel. It was like, I just think about that part of things, for the 3 days I was there, the 3 nights I was there, plus the airfare and all that. It was just like, Jesus, this, I mean, would have been a lot for me. Alrighty, guys, this is probably the end of it right now. I think we're at the end of our comments, and we are 2.5 hours into this, which is a very long live stream. This is not necessarily as long as I really wanted to go, but we were having such a good time, and I don't know if I really want to go on a rock to the river, but I think that's a walk to the river, but that's what Freddie wants to do, so I'm going to head off and do that. Wow, first class flight and hotel. George seems first class. Um, yeah, and it was like, to be honest, I think that was like maybe the third time in my life I had ever flown first class, so it was really nice. I mean, normally you're like kind of squished in like sardines back in coach, but yeah, it was a first class flight, and George is just cool. Like George is the coolest dude ever, and I mean, the amount of trust that he gave me to go up on stage and speak at that event. I mean, it's a very like it's like it's a high class event. I mean it's the real deal. It's not like a bunch of people showing up in a meeting room or something like that to talk. I mean this is like it's full on. It's the real deal. Mark Moss, like if you ever see Mark Moss' presentation, it is so good. Like his presentation when it was on down there, I was like, wow, like holy crap, this guy does it good. very entertaining, very flashy presentations, very good information, especially when he was rambling on about Bitcoin. I shouldn't say rambling on. He has really good information, but once he started going on it, I was like, okay, this is a guy who's really into his stuff. But his presentation was just really, really out of the park, really nice. But yeah, and like George didn't ask me. He didn't ask me anything about what I was gonna do or say. He was just like, okay, so you go on at this time, grab the mic and do your thing. See you later. And I'm like, okay, George, he didn't ask me a single word about what I was gonna say. And that's cool, right? To put that kind of trust in me. All right. Cheers, brother. Thanks. All right. And it caused people to buy the longer maturities. Oh, we're still going there. Thanks. Thank you, Yui. Yeah, thank you guys. Thanks, Simon and everyone much. All right. Like as if paying off. Oh, we're still. Django wants to keep talking about the bonds. All right. Like as if paying off the debt inverted the yield curve. I think probably what they were saying is that if you don't offer here, right, if you don't offer the issuance on the low end, then people are going to start moving into the high end, and that would start lowering the yield on the high end, and would be the inverting of the yield curve that I think would be happening from that. I think that's what they were kind of referring to in the press release. All right. Make sure to hit the like button. Has been stimulated before you go. Yes, thank you, All Nighter. George has always treated me with more respect than I expected. George is a cool dude. He is very he's a really good guy. I mean, and I don't know like how else to describe it other than like, when he talks to you, he treats you like a really normal human being. He doesn't like, treat anybody as if they're under him or anything like that. It's always with the high, like with mass respect and just a good energy, good vibe to him. I think I have misjudged George Gammon. I had some grifter vibes, but that's how I see Mark Moss anyway. Mark Moss is a good dude too. Yeah, absolutely. Mark Moss is a really good dude. I got to hang out with him at the first Rebel Capitalist that I went to. In fact, there's a great picture that I have, which kind of bums me out because Sarah went to go take the picture. And right then, another person had stepped up along Sarah because it was a great picture of all of us. Like, I forget all who I was there. Had Mark Moss and Lynn Alden and George and Joseph Wang. Anyway, there was a bunch of us all lined up. And soon as Sarah went to go take the picture, this other girl stepped up to take a picture too. And everybody turned their heads and looked at this other girl because she was just stepping up there right at the same time. And so I'm the only one looking at the damn picture as everybody else had turned their eyes away from it. And so it's just like, oh, that kind of sucks. But anyway, I got a picture with those guys lined up. Okay, super interesting stuff. I've actually drifted apart from Mark, but still like him. He's also treated me with great respect. Yeah. I have to not go by what I see because I have a deep distrust for celebrity types. Um, yeah, it's so funny because a lot of times I had like this sneaking suspicion of some of these celebrity types that they were like agents, like secret, infiltrating the macroeconomic sphere to put out like some propaganda information, and then we all believe that they're against the government, but actually they're a agent provocateur, kind of thing. And I've heard people say that about George. And the only thing I can say about it is like George didn't ask me a single word about what I was going to say on stage. I could have gone up there and been like, "Don't listen to this dude. They're all like, whatever." He didn't ask me about any of that. He trusted me enough to just go up there and do what I was going to do. Everything that I have ever seen of George has been like giving people the space and the ability to do what it is that he knows that they can do. And then he just lets them do it. And it's just like, I mean, I don't see where this is like some kind of agent provocateur mentality or strategy. I don't know where that would come from. I think he really honestly just like recognizes people who have done what it is that he feels are the appropriate things for the advancement of his agenda of like providing information and doing these conferences and all that. Nobody does anything without a reason for doing it. Everybody's doing it for money. I'm doing this ultimately for money at the end of it. I want to be able to provide value, and that value should be able to provide some sort of abundance back to me. So I'm just going to go for it in that fashion, right? He recognizes that in a different way. He says, man, I can provide a massive amount of value and I'll get some abundance from that. And he gets a lot of it too, because he gets a lot of attention from the things that he does. He works hard, really hard. I mean, you go to these conferences and by the end of it, you can tell that it has drained him. Like he has put everything into it, and you can tell he's going to go and crash out for the next 4 days and not do anything, All right. Yeah, I was still yapping. Thanks, Simon. Yep, but I think's the take it to the extreme. And I totally agree with you, that yield curve thing, that's exactly what was going on. Thanks for sharing. Yep. Thanks for being here, guys. Once I get to know someone and trust them, it's a strong bond. Well, thanks for your willingness to charmonger. All-nighter hider, thanks to you for understanding. Absolutely, I have had to confront my faults. It sucks being honest to self sometimes. Yep, that's it. It's I remember my stepmother used to say something to me all the time when I would be trying to self-justify or something. She would be, stop kidding yourself, right? Stop kidding yourself, kid. And I'm like, all right, who am I trying to convince? She was like, you're not convincing anybody, but you're trying to convince yourself. Stop it, So yeah, you got to be honest with yourself. All right, that's how I run business. I find the people who are a good fit for the job and let them do their thing. That's a good position to be in. All right, people like to feel like they are in control, and if they produce value, they should be. Well, here the thing is that if you are producing value with no intentions of really ever getting anything back out of it, then it will just naturally happen, right? Like, you can't force your way out of not having it. That's why I asked for $1, right? I'm not asking for a lot. I'm just asking for something, because that's the mindset that I want to be in, is the one where money flows to me for the value, for the exchange of value, right? So I try to put it to a point that it's insignificant to you, right? It's just $1, right? It's, well, not insignificant. $1 means something to everybody. But it's not much when it comes to $1, but it means everything to me because of the direction and the energy and the flow. That's what I'm looking for. Is just like, yes, that's the position that I want to be in, is in that kind of environment. Whether I make a bunch of money from the membership, that's kind of, that's neither here nor there. But it's the mindset that I'm putting myself in that is what I'm looking for. That's the position that I want to be. If I can get 200 members, I can get 400, I can get 800, I can get 1600. I mean, I can grow this thing, and that's what it makes me feel good about. Or makes me feel good about doing it. Sounds a lot like free market. Free market is the only way to get the most out of your resources. Absolutely, it is. All right. Awesome time. We went way too long, 2 hours and 42 minutes. It was such a good live stream. I hope you taken something away from this press release. In understanding the liquidity issues within the bond market. This was the important part of it. The discussion and everything that we had after it, especially some of the things that Greg had commented, that was brilliant stuff in there. But this is how we break it down. We internalize this information, and now we understand what it is that we need to do. When people are like, man, are you going to buy that motorcycle? Or are you going to wait? What are you going to do? Well, knowing the position that we are in, knowing what's going to be coming in the future, listening to what's probably going to be a lot of propaganda out there about what's happening within the bond market when this actually starts to take place. There's going to be a lot of confusion. We're going to be understanding. We're going to be ready for it, prepared, and knowing, we may not recognize exactly what's happening at all times out there, but we have a good clue, right? I mean, we know that once this starts to take place and we see and hear all the other economists and news articles and people out there blaming and pushing and talking about what it is, we'll have our own opinion about it already. Right. And, some of that opinion might change with some of the information that we get out at the time. That's part of it. It's just like our opinions may very well change when we get presented with new information. And, This is the way we do it. We break this stuff down all the time. I mean, I love it. I could do this all day. I could do this nonstop from now on forever. Right? I mean, I could just have a live stream going and I would just be like constantly talking about everything that I am reading and researching all the time, 24/7. All right, guys. I gotta go. All right. Love it. Thanks, everyone. See you next time. Okay. I have welding to do, but I was organizing bolts while listening and commenting. All right, guys. Uneducated Economist, thank you for being here. Thank you for being part of the membership. Thank you for hitting the like button, and thank you for all the wonderful comments. And we'll see you next time. You let me know.